Market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua for COP in Sharm el-Sheikh, Egypt, with Tom McKenzie in London. Good morning, Tom.
Good morning, Francine. And here are the top stories. Looking past COVID, Hong Kong stocks power Asia higher as investors downgrade concerns over China's vow to unswervingly stick with virus controls. But Europe looks set to open lower. Tech turmoil. Apple cuts its outlook for iPhone shipments on China's lockdowns. The Wall Street Journal says Meta is planning to start laying off staff this week. Plus, yes, COP kicking off. The United Nations climate talks start in Egypt with a deal to discuss climate reparations. We are, of course, live in Sharm el-Sheikh. Okay, let's check in on the futures then as we digest what happened then over the weekend in China. Reconfirmation, if you needed it, that officials in Beijing are going to stick with COVID-0. Really, if you are expecting any changes, it will be incremental from Chinese policymakers. That seems to be the view. There's been a bit of a mixed reaction in terms of the equity markets versus what's happening in the currency markets. The yuan is under pressure, but equity markets in Asia holding up. The futures then have been pointing lower here in Europe. You're seeing that play out now in the first few seconds. The FTSE 100 is down 0.3%. We'll wait for the other main indexes to open, but currently what you're seeing are the futures playing out again. Live pricing currently lower. French CAC current lower by 0.6%. Over in Germany, a drop of 60 points, just down 0.4%. The Spanish IBEX also lower by about 30 points, down 0.4%. We did have the Apple story coming through. They are going to be cutting their production by 3 million, pointing to softness in demand. And talking about softness in demand, imports and particularly exports out of China, disappointing in terms of that data. Again, suggesting that consumers are starting to rein in their spending. The future stateside pointing to losses of 0.5%, but those Chinese stocks listed in Hong Kong and the tech stocks still pointing to gains, building on the gains that we saw on Friday, currently up 4%. Again, brushing off the reiteration from officials in Beijing that they're going to be sticking to COVID-0. The pound is weaker, 113, just down 0.7%. Brent at $97 a barrel. That's a drop of 1.3%, tying back into the China story. And of course, energy is going to be in focus during these all-important COP27 conversations. Francine is on the ground for us in Sharm el-Sheikh. What is the mood? What is the atmosphere, Fran?
Yeah, the atmosphere is buzzing. There's a lot less people than there were in Glasgow and COP27, but we do have President Biden arriving on Friday. We have a number, of course, of high-profile guests. President Lula of Brazil will arrive next Monday. Now, today we have some of the European heads of state. Now, the focus is really not on anything huge and new. So let's really focus on what this would make it a successful summit. It's really about implementation and financing. So yesterday there was a bit of a breakthrough, Tom, with that loss and damage, which means that it's rich countries that haven't polluting that would give money to the poorer countries. That is a discussion point, but at least it's on the agenda, and we didn't hear about big fights between the countries about putting it on the agenda. But let's get back to the markets, and then we'll have a great conversation with Mr. Hoyer of the EIB. Our Bloomberg MLive managing editor, Mark Cudmore, is standing by, and he's looking, Mr. Cudmore, at the Hang Seng rally. Good morning.
Good morning, Fran. Yes, I am indeed. So over the weekend, China firmly quashed any hopes of reopening there. They're sticking unswervingly to COVID-0. So you'd expect Hong Kong stocks to give back some of the immense gains they made last week. Not a bit of it, up another 2.5% today. Why is that? Well, it's not so much that they're trading this enthusiastic reopening story. It's the extreme pessimism that was priced before. So this chart, the blue line, is the 12-month best estimated PE ratio for the Hang Seng Index, and showing as comparison is the white line is the same for the S&P 500 index. And you can see up until about 2011, they traded pretty similar multiples. They've been diverging for a long period of time, and the Hang Seng at the end of October reached its cheapest ever. And that's the really, really extreme negativity. US, despite the massive falls this year, is still not cheap. It's about fair valued. But I think the point here is that the Hang Seng Index has priced extreme pessimism. The next catalyst of the story will be positive, and that's what everyone's focused on, not caring about the timing.
Thank you so much, our Mark Cudmore there, our Bloomberg MLive managing editor. Now, we're back here in Sharm el-Sheikh, day 2 really of COP27. Joining us now is Werner Hoyer. He's president of the European Investment Bank. Mr. Hoyer, thank you for joining us. You're, of course, critical in a lot of the financing for some of the green projects. Now, we have this, some of the initiatives, the Climate Bank Roadmap. What does it mean for the EIB? What concretely are you going to implement and finance?
Well, we had decided in 2019 in a speech to the General Assembly of the United Nations at the Climate Summit that we would make sure that we would be Paris-aligned by 2021,
yep.
that we would have 50% of all our lending projects climate-related by 2025. We have done that, both. And now we have said by 2030 we want to have triggered investments in the climate and sustainability field by at $1 trillion.
But Mr. Hoyer, are you stepping in where banks are not lending to some of these green, or are you in addition?
I think obviously there are many projects which are too risky for commercial banks, and they need at least an anchor investor who moves first. We are a crowding in institution. We don't want to crowd anybody out. No. But if we have a good project, and we are a very technology-oriented bank, we are full of engineers and natural scientists, if they come to a conclusion that a project is worthwhile pursuing, then all of a sudden private investors come to it and say, okay, can we co-finance? So this works very well.
So where do you see these opportunities? If you look at the energy crisis, and let's remind everyone that in the last 12 months, since we were in Glasgow for COP26, we had the war in Ukraine, we had, of course, the Russian invasion, energy prices going through the roof, inflation. There's a lot to deal with. Does this accelerate the energy transition, and can you play a part in it?
Well, I must say, for the last 3 years, I have the feeling I'm busy with viruses or wars, and this is terrible. But on the other hand, what's the consequence we draw from this? Do we hide behind the virus and the war in Ukraine because we don't feel too committed to the climate objectives, or do we say no? The war in Ukraine is showing us, for instance, that these kinds of dependencies on fossil fuels deliveries must stop. And this is a huge opportunity because I'm a structural optimist. I always say we have the technologies to reach the new age, and that means don't hide behind the virus or the war. Do it now.
But you think that's going ahead? I know you're an optimist, so...
Well, I'm an optimist, but I'm also a realist. I must say Glasgow was a wonderfully organized COP26, but it was full of announcements, commitments, and now it's time for delivery. And when COP27 is over, we know whether everybody has delivered. The multilateral development banks are definitely resolved to deliver.
But does that mean that you worry that people will not take the implementation? I mean, this is about implementing, right? This is about sticking with the promises and making sure they're delivered. Do you worry that people are backtracking or dragging their feet because of the crisis we're living?
Backtracking would be absolutely the wrong step, but of course the temptation is there. But if I put myself into the shoes of a national politician, I've been national politician for 3 decades, how can I overlook the fact that they're under huge pressures to come up with short-term fixes? But these short-term fixes must not come at the expense of the medium and long-term sustainability. So sometimes we talk about transition solutions. Only now because the situation is so urgent. Yeah, transition is okay, but behind this, in many cases, you smell perpetuation. And that means sticking with fossil fuels forever. And that would kill the planet and also our credibility, by the way.
Mr. Hoyer, I know you've been working, of course, on issuance in currencies like the euro. Is sterling up next in some of the debt issuance, for example? Are these some of the novelties that we could expect this or next year?
Well, I wouldn't be surprised, but on the other hand, we are active in so many currencies that I don't want to concentrate too much on one. But of course, sterling is extremely important for us.
But you don't want to speculate because, I mean, does the current market turmoil that we saw in sterling change anything, change your plans, or is that more short term?
No, I think for us it does not have an immediate effect. But on the other hand, it shows how big the impact can be when domestic politics go wrong.
What do you see your role here as COP27? I know you're here and you have a lot of you have back-to-back meetings basically. This is one of your only TV interviews. Are you pressurizing people, or are you trying to look the deals that you will sign for to get things moving?
Well, there are two spheres which are particularly important for me. Number one is the cooperation of the multilateral development banks. I'm presently chairing the 10 biggest multilateral development banks, and we must intensify our cooperation. It doesn't make sense to work next to one another or even in competition. We must do that together. We are making big progress on this front. The other thing is development policies. We need to take development more seriously when it comes to tackling the climate challenges, because the developing countries must now take decisions. So they can say, okay, we have reserves, maybe fossil fuel reserves that we can now mobilize, and then repeat the mistakes the industrialized countries have done 200 or 100 years ago. But on the other hand, they must then get the necessary support in order to benefit from new technologies and from renewables. This is possible, but I think the industrialized world still needs to deliver on that as well.
Yeah, that's all about financing. Thank you so much for joining us, Werner Hoyer. They're the president of the European Investment Bank. So we'll have plenty more from Sharm el-Sheikh here in Egypt. We'll also be speaking to Anders Opedal, the chief executive officer of Equinor, and Kristalina Georgieva, the IMF managing director. So you don't want to miss these two interviews live from COP27 in Egypt shortly. This is Bloomberg.
inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Count Under the Close.
Welcome to Bloomberg Crypto.
November 8th, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections.
We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tune in to Surveillance live from D.C. at 6 a.m. on Wednesday for the latest overnight. This is Bloomberg.
Welcome back to the Open. Happy Monday, 13 minutes past 8 here in London. And you're seeing losses across the benchmark of 0.3%. Futures in the US pointing to similar losses as well. So not really picking up the handoff from Asia, particularly strong once again in Hong Kong, brushing off those tech stocks listed in Hong Kong. The reiteration by officials in Beijing that they're going to be sticking with COVID zero. Let's bring in now Wei Li, Global Chief Investment Strategist of BlackRock. I'm very happy to say joins us in the studio this morning. Good morning, Wei. I want to start with China then, and whether or not you think there's all this speculation. I think probably comes down to a question of just how quickly and to what extent the time frame has shifted around COVID zero. But I also want to get your views on whether the rally that we've seen in the last few days in Hong Kong is rational. There is a view, and Mark Cardmore from our NI team has said this is a story about valuations as much as anything, and that there is so much valuation, there's so much priced in terms of negativity into these stocks, that it makes some sense on that level. What are your assessment in terms of the equity direction that we've seen from those Chinese stocks?
That's right. I think valuation for Chinese stocks are very, very cheap. So a lot of the geopolitical risk premium and also a lot of the growth uncertainty is in the price. And also you talked about COVID zero when the opening up could take place. That was getting markets excited last week, but it's impossible to be precise about it. I think it's really important when we look at China investing to really look at the bigger picture, right? So if you think about growth for this year, we're forecasting low 3, and that is already budgeting in some expectation for reopening to start moving this year. And next year, we're looking at mid 5 in terms of growth expectation, and all of these numbers are below trend and the target that they themselves set. And also what we have seen from the Party Congress is that there is this trend of focus broadening out from just on growth to national security, to social cohesion, common prosperity, and all of that tells us that the headline growth are likely going to be below trend for an extended period of time. And not only that, the transmission mechanism from headline growth to corporate profitability, so from macro to micro, may be less efficient going forward, which is why we downgraded China earlier this year. We're staying neutral at this juncture, even as valuation is very, very cheap.
Not ready to change that view yet?
Not at this juncture, not at this juncture.
Okay, and you've been consistent as well in your commentary and your view that the Fed is going to have to accept other central banks higher levels of inflation, and there's a risk of over-tightening as well. I just wonder if anything that you heard from Jay Powell last week changes your views or how you may want to be allocating or positioning. So rates may come off a little bit in December, but the terminal rate will be higher, was the key takeaway. Does it change your assessment at all?
I think it adds to our assessment that right now the focus of central banks, including the Fed, is inflation fighting at all costs in 2022. And that was the case for the Fed, that was the case for BOE as well. So we forecast peak rate in the US to be around 5%. We forecast a peak rate in the UK to be 4.25%. And the reason there is a difference, not necessarily because of the change, any difference in terms of the central bank focus, but rather UK economy is weaker at this juncture, and we're likely going to see a recession sooner in the UK rather than in the US. For the US, the payroll number on Friday also adds to this conviction that right now labor market is not so much a challenge. In fact, if anything, if you look at the participation rate for the US labor market, it's back to the level at beginning of the year. So participation rate has not increased. We still have a labor shortage. Headline labor growth resilience continues to present the case for the Fed to keep hiking and over tightening for now before the pain becomes too clear for them to pause next year.
So more pressure needed then, arguably, on the labour market. A terminal rate, that the view is 5% for next year. Wei Li, we can get more of your calls just in the next few moments. Global Chief Investment Strategist at BlackRock, staying with us. Meanwhile, we're going to look ahead to what's happening after the break. The CEO of Equinor, Anders Opedal, is going to join us from COP27, so that important conversation around energy, of course, at a time when the United Nations says it is going to be almost impossible to meet that 1.5 degree target. Stay with us. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome back to the Open, everyone. 20 minutes into European trading day, and this is a picture across the board. A bit of pressure, of course, to focus not only on China, but of course on inflation. Big week for inflation in the U.S. Now we're back in Sharm el-Sheikh, COP27 kicking off. Not all bad news. There has been agreement, at least to talk about loss and damage. But I am very excited to talk about energy security with Anders Opedal. He's the chief executive of Equinor. Mr. Opedal, thank you for joining us on Bloomberg. Now, it is fair to say that Norway has thousands of miles, of course, of gas pipelines and countless drilling platforms. So when you look at the attack on Nord Stream 2, what does it mean for you to secure some of those assets? How difficult is it to keep them safe?
Yeah, thank you, and good morning to you as well. What we saw on the Nord Stream was a kind of a stark reminder of someone has an intent and the capabilities actually to do this. So we have also in the Norwegian continental shelf seen a lot of drone activity, and the combination of the Nord Stream and the drone activity made us to increase the security level. And we have NATO allies also helping us now patrolling around the installations and particularly the pipelines. We have done service on the pipelines, and we do everything we can do to also make sure that we keep the people safe that work on these installations.
And you're pretty confident that that can be done?
Well, it's a great collaboration now between the different countries, depending on the energy from Norway, Norwegian government, and the companies also working with oil and gas in Norway. So we're doing everything we can to make sure that we can have safe and efficient energy to Europe.
There's a lot of talk about changing the European gas market. Were we so wrong in relying on spot prices? Do we need some longer-term gas fixtures?
Well, basically, you know, what the big problem with the market at the moment is that there is a lack of energy. You know, gas, obviously, but also energy for renewables. So we need to find a combination of reducing demand and try to invest, making sure more energy can come.
That's, of course, a fundamental, but then you have this infrastructure, which doesn't help.
No, but, you know, it's again, the infrastructure, it can transport what it has at the moment. So we have been able to really increase the production by 11% over the last year, utilizing the infrastructure as best as possible. You know, the installations, the pipelines, extraction. It's a lot of hard work by many to ensure that we can increase the gas.
But on longer-term contracts, do they make sense for Equinor, and what needs to happen for them to make sense if they don't now?
Well, I think long-term contracts make sense because, you know, this gives energy security and also a good signal for us that gas is needed also in the future in terms of doing exploration. And also natural gas can be also converted to hydrogen in the future. So it makes a lot of sense to establish a good relationship between countries and Norway now for securing gas for longer term. And we have also offered countries the fixed-term, long-term contracts as well to ensure that the prices stays at an affordable level, and we also have energy security.
So how do you see the two? If you look at energy security and what we've just been talking about, and the fact that we need more energy, how difficult is it to translate into clean energy? Does it accelerate, or does it actually take a pause because of the crisis we're dealing with?
I really hope it will accelerate. But of course, we see that we are moving a little bit backwards these days because of increased use of coal, etc. But this gives a lot of incentives. As I said, we need to invest more to get more energy. More of this needs to be renewable. So in one way, we need to kind of make sure that we still invest in oil and gas for have energy security, and at the same time stepping up the investments in renewables.
But is there a danger that actually we're just going too slow? I think the Aker chief executives said something like, we're tearing down the house before building the new one. But if we're going to meet these goals, then something needs to happen much more quickly.
We need to do much more quicker on the renewables and the decarbonization technologies. The time it takes now to make these investments are too long. We see on the Dogger Bank, the world's biggest offshore wind park, it took us 8 years to just get the paperwork ready to start executing the project. We see that all around the world, that the time to plan it takes longer than actually executing it. So this is where we need to attack, and that's why I'm here at the COP27 as well, to discuss this with politicians.
Equinor generates so much cash. What will you do with this cash?
Well,
M&A?
First of all, we pay a lot of tax. We have a tax rate around 65% worldwide altogether, and 78% in Norway. But we're also investing. We decided already with our strategy last year to increase our investment in renewables. We will invest from 2021 to 2026, $23 billion in renewables. So we are increasing our investments in that area as well.
So is that yes or no for M&A?
I cannot comment on M&A, of course, but we are definitely looking for all opportunities to move faster in the renewable sector.
All right, thank you so much for being a good sport. Anders Opedal, the Equinor chief executive, there with a robust conversation on some of the transition and, of course, what it means going forward. Now, coming up, we'll have plenty more from Sharm el-Sheikh. I'm looking forward to our conversation with the IMF Managing Director, Kristalina Georgieva. Also, Tech in Trouble, we look into the outlook cuts and layoffs announced by some of the major players. We're really fascinated by the story to try and understand what the underlying trouble could mean. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball, so their apps would surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are on Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Now, we start, of course, looking past COVID. Hong Kong stocks power Asia higher as investors downgrade concerns over China's vow to unswervingly stick with virus controls. Europe opening lower. Tech turmoil. Apple actually cuts its outlook for iPhone shipments on China's lockdowns. The Wall Street Journal says Meta is also planning to start laying off staff this week. Plus, COP kicks off. UN climate talks start here in Egypt with a deal to discuss climate reparations. We're live in Sharm el-Sheikh. So this is a picture across the board. Tom, if you look at what we're expecting to achieve here at COP27, it's not some of the big agreements that we had in Paris or even in Kyoto. This is about implementation, a little bit of a rosy picture yesterday when you had to, talk about the agenda. Now, this is not huge news, but actually was seen as a positive because a lot of the countries did not fight over what to put in the agenda. There's something called loss and damage, which is critical, which is rich countries at least starting to talk about the kind of money and financing they can give to poorer countries because of course, what they've been dealing with in terms of floods and the consequences of climate change. So we'll have plenty more on that in a second. I'm looking forward to our conversation with the IMF Managing Director.
Yeah, and of course the United Nations saying that even if all the commitments are met and implemented, you still get to 2.5 degrees C in terms of warming, which will still lead to climate catastrophe. Here in the markets, a bit of a turnaround in terms of sentiment. The benchmark currently up 0.1%. Yes, we had a very solid session in Hong Kong, building on those gains, those huge gains that we saw on Friday, despite the fact that officials in Beijing have pushed back and said COVID-0 remains firmly in place in terms of policy. The DAX is gaining 0.3%. The FTSE 100 currently up just almost 4 points. Let's move it over in terms of the sectors as we also consider, yes, China is a factor, but also looking ahead to that CPI print midweek out of the United States. It's expected to come down year on year, but of course that will play into the decision-making of the Federal Reserve after what looked like, at least on the top line, it was a pretty solid number in terms of non-farm payrolls, 261,000 additional jobs. Yes, the unemployment rate came off a little bit, but there's a participation rate was a cause of concern, and wages also higher. And then you have the midterm elections as well. So the politics mixing with the data when you look ahead to the US. Travel and leisure at the top of the list in terms of your sector gains, up 2%. 5 or 6 sectors currently in the red. Construction and material at the bottom of the list, down 0.8%. Let's get it back over to Francine for an important interview, again, out of COP27. Fran.
Yeah, I'm delighted to be joined by Kristalina Georgieva, IMF Managing Director. Thank you for joining us. When you look at developing nations, they're facing so much. It's, of course, the consequences of climate change, but it's inflation, it's debt, it's a high dollar. How does climate change concerns rank into the leaders' thoughts?
Well, let me start by recognizing that we can survive recession, we can survive inflation. What we cannot survive as humanity is unmitigated climate crisis. So it has to be a top priority. But what we're facing today is unfortunately a bit of a tango, a step back on the climate front because of the energy crisis leading to the increase of use of fossil fuels. This, however, is also putting pressure to accelerate the move to renewables as an alternative to fossil fuels for developing countries.
And when you talk about a step back, do you mean using coal? And can we make up for it in other things, basically?
What we are seeing is indeed countries relying more on coal because of the high price of oil and gas, and this is taking a bit of a dent on mitigation trends. Look, where we are today is not a good place. We need to cut emissions between now and 2030 by somewhere between 25 and 50%, not increase them as it is still happening. And to do so, we have to act on two fronts fast. Price on carbon and private investment in emerging and developing countries.
Will we get them? Will we get this and reparations? Really, it's all about financing, as you rightly say.
It is all about the ability to reduce perceived and real risk in emerging markets, and this is where we, the IMF, are also stepping forward by integrating climate aspects of policies in our normal policy discussions with countries, and by delivering on our promise from last year. Last year we said we are going to create a new financing instrument, long-term. Now we come here, 40 billion in place, 3 countries already crossing the finish line. And that, by the way, is a message I have for everybody. This is an implementation call. Please tell me, what have you committed to? How far are you in delivery?
So we also see a lot of developing nations in debt distress. What does that mean for how countries come together to try and help these countries that are most distressed, which also, by the way, probably has to do with a higher dollar?
Yeah. You ask this question, and it is correct. Developing countries are hit 3 times. They're hit by the fact that COVID is still lingering, and the war in Ukraine is affecting the global economy. They're hit because interest rates are going up. Those with high level of debt, they have to pay through the nose to meet their obligations, and they're hit by the expensive dollar. So when we look at the picture, what we must do is to accelerate the implementation of the so-called common framework for debt restructuring, and then be creative. What more can we do? Here, an important discussion is taking place about debt for climate swaps. At the IMF, we are in favor of identifying revenue streams in countries through carbon offsets, and then translating this into debt service for these countries. Can it happen? It can, but only if we have good data. So it is credible, critical, and if we have standardization of the carbon credit market. Very fragmented today. We have to muscle up and make it more harmonious.
I mean, we talk every day about inflation, and there seems to be a belief in the markets that we've seen peak inflation. Maybe the U.S. inflation figure today will actually give us an indication of that. Do you think we've reached peak inflation, and does it help with your cause in climate change and helping poor nations?
It is very possible. I'm not going to jump ahead of data, but it is very possible that we are peaking. We now see central banks very united on fighting inflation is top priority, and rightly so. If we don't succeed, it would be anchor, and then the foundation for growth, which is price stability, is dented. Where we are going to be in a couple of months, in a year, there is a question mark on that. We actually think inflation is going to be harder to bring down to the desirable level of around 2%. Why? Because the drivers of inflation are not only supply-demand disruption, but also a changing cost structure that comes from the realization that no more we make economic decisions only on the basis of cost. Supply chain security also matters. But if we are going to see diversification of supply chains, that inevitably is going to put some pressure, upward pressure on prices. So we are going to do two things: central banks fighting inflation in traditional way, and diversification of supplies going in parallel. And those two things would bring us at the point of inflation being again in its rightful place.
I mean, you're an environmentalist economist, right, by nature. So if there's one thing that needs to happen here, and again, I could ask you about the UK. I know you don't believe in a windfall tax for a lot of the companies because it doesn't give them stability of understanding in what kind of environment they invest in. If there's one thing that we need to get done here at COP, what would you bank on? What's your number one priority?
Well, number one priority is to recognize that only sound policies are going to get us out of the climate crisis. And as much as it is difficult to accept, a fundamental part of policy is bringing cost to the rightful level, meaning pricing carbon. Whether we do it through tax, through trade, or through regulation, doesn't really matter. But unless intensity is factored in investment decision, carbon intensity, we are not going to move fast enough to save our children from a very tough time.
Do you think that will happen?
Oh, yes, it will happen. Oh, definitely it will happen. Let me just give you the numbers. A couple of years ago, only 15% of emissions were covered by some form of price. Today it is 25%, and we are going up and up. You know what is going to be critical? Not to be ideological about is it tax, is it trade, is it regulation. Build the biggest possible tent in which everybody can find its place according to the political considerations countries need to respect.
MD, thank you so much. As always, the MD there of the IMF, Christina Georgieva, talking about building this tent, this broad church, to make sure that it's as inclusive in terms of regulation and policymakers as possible to make sure that we go forward. We'll have plenty more, of course, from Sharm el-Sheikh here throughout the day, but also up next we talk about tech. Meta, we understand, reportedly planning to lay off thousands of staff. Twitter, meanwhile, is said to have asked some workers to come back. So we'll bring you those stories next. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
This month, Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio will have complete coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage begins November 7th, only on Bloomberg. Business Authority. A multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open, 44 minutes into the European trading day. A turnaround in terms of investor sentiment, at least for now. Gains of 0.2% on the benchmark. And the futures stateside also pointing higher. The S&P E-mini is up 0.2%. NASDAQ futures also higher. Still with us is Wei Li, Global Chief Investment Strategist at BlackRock. Wei, I wanted to get your views on inflation. I know you had a top-line view that you've been pretty consistent with, but we're now starting to see the New York Fed gauge of underlying inflation. It has turned lower. We're looking ahead, of course, that all-important CPI print. 7.9% is the forecast later this week. Are we starting to see a peak in inflation? What is your view in terms of this potential moment in terms of price rises, inflation? Are we starting to see a pivot?
It's possible that we're seeing a peak inflation, and it's also true that new order waiting time is starting to come down. But it's also how long it would take for inflation to come down that will impact market sentiment as well. And yes, of course, at this juncture, from a year-on-year comparable perspective, things are coming down. But we, of course, care about sequential. And last month, sequential core CPI surprise on the upside, and we continue to see labor shortage. We talked about participation rate at 62.2%, which is no improvement on the year. And on top of that, we continue to see this service goods rotation continue to put pressure on the service side of the economy. So all of that, just to conclude, we continue to expect persistent core inflation as this service goods rotation starts to slowly play out. And even as headline inflation comes down, we expect that to happen somewhat slowly, and that, at least in 2022, does not change the inflation fighting sole focus of the Fed.
So persistent core inflation, where does that leave the squeeze on margins then? The contraction on margins, how much further does that have to go?
There is quite a bit more to go in terms of margin compression. So if you think about structural reasons behind why margins have been expanding all through these years, thinking about low rates, low cost of production, low labor cost, all of that are stalling, if not reversing. Also, globalization helped with margin expansion, and that is stalling as well. So we have been expecting margins should come under pressure through the course of this year, and that is starting to play out. So if you think about earnings growth, stripping out energy, we're actually already in an earnings recession, but more to come because we're expecting a recession in the US.
Yeah, you strip out energy and it looks far worse than on the top line, doesn't it? Wei Li, fantastic as always, thank you for coming to the studio. Good luck with the next few weeks as well. Wei Li, of course, Global Chief Investment Strategist at BlackRock. We're talking about margins there. Let's move and shift the conversation to what's happening in technology then as well. Apple said to have trimmed its iPhone 14 output by 3 million handsets as demand softens. The Wall Street Journal, meanwhile, says Meta will begin laying off thousands as soon as this week. And Twitter, well, it's now asking for some fired staff to return. For more, we now go to Bloomberg's Charlie Wells. Charlie, what does this tell us then when it comes to Apple about the short-term prospects for demand around the iPhone 14?
Yeah, Tom, so this is bad news for Apple. That is a company that generates over half of its sales from iPhones. This is bad news for Apple at a time that is crucial for the company. It relies heavily on the holiday shopping season in the United States. We're literally just a few days away from the real beginning of that with Black Friday in just over 2 weeks. And what we're really seeing here are both supply issues and demand issues. So on the supply side, we're seeing some challenges due to lockdowns in China that have been clipping output for that very expensive 14 Pro phone that has actually attracted a lot of customers. And then on the demand side, we're seeing softer demand than expected for those cheaper 14 models. And that should be very concerning for a company that had anticipated a lot more excitement about that more affordable model.
Yeah, indeed. So from the hardware to the software and the question of Meta and Twitter. So the reports around Meta, obviously going to be concerning for staff there. Twitter, though, reversing course, at least to some extent, Charlie?
So a lot of anxiety overall. So we've known since September when Mark Zuckerberg talked about how there would need to be changes at Facebook, and we're starting to see that play out with this Wall Street Journal report, potentially thousands of workers impacted. The layoffs could begin as soon as Wednesday, and staff have been told that they need to stop making non-essential travel. As far as Twitter goes, again, this comes to some of the chaos that workers had feared when Elon Musk took over. They, of course, 3,700 workers were fired on Friday, and then later dozens were told that, oops, maybe you should come back. This seemed to be some firings that were done in error. Some staff may have been chosen to come back because they were overly essential for certain projects. So a lot of chaos and anxiety in Silicon Valley.
Yeah, quite the oops moment. More broadly, Charlie, what does this tell us? Was there complacency within these tech companies in the good times leading up to the pressures we now face? What is it more broadly, the question about and the story around Silicon Valley?
Really big cultural change here, for companies that really just have not been used to layoffs. They've been used to advertising revenue, that sweet digital ad money, and those streams are trickling down now. They are not as profitable as they were before, and in large part that is because of changes in demand from advertisers who are concerned about the economic climate. But this also comes down to changes at Apple, which have actually made digital advertising less effective. So this is a huge shift sweeping through Silicon Valley, and I'm sure this is not going to be the end of it.
Yeah, and Meta has railed against those changes by Apple, haven't they? As have other players in that space. Charlie Wells, always brilliant working through what is happening in the job space when it comes to technology. Thank you. Coming up, US voters go to the polls for the midterms. We're going to focus on politics and the implications for the US. Stay with us. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 52 minutes into the European trading day. Risk sentiment has turned more favourable, more positive, just in the last 30 to 40 minutes or so across the European session. Gains of 0.3%. The S&P E-mini is also pointing higher by 0.2. In your currency market, the pound had been under pressure, currently at 1.14. Again, a 0.3% as the dollar comes off just a smidge. But we are, of course, focused on what's happening at COP27. Francine Lacqua on the ground for us, having a string of important conversations. Francine, you've been speaking to the EIB. You recently, just in the last few minutes, spoke to the IMF director, of course, in terms of what needs to be done. I guess the question is, what can we expect over the next couple of weeks, given that the United Nations says it's all but impossible that we're going to be able to meet that 1.5 degree C target?
Yeah, so they released two reports, Tom, good morning. One actually saying that it's going to be very difficult given the current standards. So again, nothing's impossible. It just depends on how aggressive you want to be with your targets now to reach that 1.5 Celsius that we need to reach by the end of the century. And this compares to the temperature increase since the industrial, of course, revolution. So this is one thing that actually there are a couple of things in terms of emissions that will be cooled off or won't rise as much as we were expecting just a year ago. But this is really the summit on implementation, financing, and adaptation. So we're not going to get great lofty ideas. It's about getting to the crunch financing to make sure that there's loss and damage for the countries affected the most. So we hope to get some concrete action done here.
Okay, concrete action, getting to the crunch, and of course Francine will be on the ground for us throughout this week with those important interviews. And from climate change, of course, we go now to politics, where of course the Biden administration arguably has had some success in pushing through climate legislation and policy around the Inflation Reduction Act. And of course tomorrow's midterm elections are expected to usher in a new era then of divided government in the US, with polls showing Democrats losing control of the House, possibly even the Senate as well. Joining us now is Bruce Einhorn. Bruce, what is the latest? What are we expecting?
Well, Tom, you're right. Most people do expect that Republicans are going to take control of the House. It is far from certain, of course, what's going to happen there and what's going to happen in the Senate. The Democrats have enjoyed an advantage when it comes to early voting. Republicans these days tend to turn out to vote on Election Day. So a lot will depend on just the turnout tomorrow. Republicans have been really focusing on the economy, on inflation, and on crime. Democrats focusing on other issues, most notably abortion, and are hoping that there will be a big turnout of young people and of women that will help them stem the tide here.
Bruce, just briefly, you touched on some of the key themes working their way through these through this debate and through the politics ahead of these midterms. The question of inflation, of course, how central is that in terms of the concerns that we're seeing when it comes to the polling?
Well, many people say that inflation is the top concern that they have, and Republicans are counting on people like that to vote for them. Most notably, there's the issue of gasoline prices in the U.S., and gasoline prices are certainly much higher than they were when the Biden administration took office. Of course, that was, in the depths of the pandemic, but that's not the sort of thing voters often take into account. They're going to see gasoline prices are high, and they may want to punish the president's party for that. So we'll have to see what happens tomorrow.
Bruce Einhorn, thank you very much. Looking ahead to those midterm elections, of course, the market's currently up here in Europe by 0.3%. Future stateside positive. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
November 8th, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections. We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tune into Surveillance live from D.C. at 6 a.m. on Wednesday for the latest overnight. This is Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Sharm el-Sheikh for COP27, and here's what's coming up on today's program. We start with China. Looking past COVID, Hong Kong stocks power Asia higher as investors downgrade concerns over China's vow to unswervingly stick with virus controls. Europe opening lower. Tech turmoil. Apple cuts its outlook for iPhone shipments on China's lockdowns. The Wall Street Journal says Meta's planning to start layoff staff this week. Plus, COP kicks off, but UN climate talks start in Egypt with a deal to discuss climate reparations. We're live in Sharm el-Sheikh. So here we are. If you look at the markets, and I know our Danny Berg is on standby. Thank you, Danny, for bringing us up to date with all the market moves. I think we opened actually lower, but I feel like today it's pretty much unchanged because the IMF managing director, who's just with me, commented on the fact that we're seeing green in Europe, and that, of course, is a good thing. The focus here in Sharm el-Sheikh is not about the lofty promises that we've seen maybe in other COPs. It's about implementation. We'll get to that in a second with our, well, I was going to call him Green Tsar. That's a thing, Danny. John Farr, so we'll get to him in a second. But first, the markets. It's all about inflation this week.
Yeah, it's all about inflation. I mean, what a week, Francine, from COP27 to midterms to inflation. There's a lot of risk in this market, so it is interesting. As you say, there's green in Europe, a pretty sizable turnaround. We did open the morning lower, and yet here we stand. You're looking at both Asia stocks and S&P 500 futures higher. I'll show you what the Europe session looks like in just a moment. Asia stocks, those have been charting higher for pretty much the entirety of the day, led by China, despite Chinese officials saying that, no, we're holding on to COVID zero. Sentiment has just been so depressed that folks are still happy to go and buy the rumor. Goldman Sachs says that you could see gains of 10% in Chinese equities should China start to reopen. Now, S&P and Europe, they start to move into the green thanks to a drop in the dollar. The dollar did start stronger today. Again, how long does that last if we are indeed going to get stronger CPI data at the end of the week? But Francine, it's interesting to look. These equity markets are getting solace from a weaker dollar because front end of the curve yields are moving higher, up 4.5 basis points at 4.7%. Could they go higher? As Larry Summers says, that terminal rates could be 6% or higher. So I mentioned Europe, just taking a quick look at the map before throwing it back to you. In Egypt, Francine, you are seeing green essentially everywhere in Europe. It is being led by even some of the higher beta sectors like Italy, or regions, I should say, Italy, Germany, a little bit of underperformance from UK stocks. Those are just up 0.1%, but perhaps that also has to do with gas, oil rather moving lower this morning. So some of the oil majors not be as happy with that picture. But overall, Francine, folks are looking for a reason to buy.
love that. Danny, thanks so much. Also looking very sharp, if I say so myself, in that white jacket. Good taste, Danny Berger. Rock. I'm joined here at COP, great color combo, at COP27 by Bloomberg Green's executive editor, John Farrar, who's leading a report in Egypt. And I showed up at Sharm el-Sheikh, and I was given a wonderful edition, good morning, welcome to the program, of Bloomberg Green. This is a must-read magazine, and I love this, Decarbonizing Your Life. So I hope everyone, every head of state also reads it and implements it with the citizens. So we're not expecting some kind of like lofty promises here, right? Action is everything. What is a good deal scenario for COP27?
Well, I think you're right. This isn't going to be like one of those big COPs like Paris, even like Glasgow, where we had these huge sort of market signals that were sort of, you know, gave green lights to investment in renewables around the world. This is what they call an implementation COP. This is going to be about countries checking their homework. And also it's about keeping the climate drive alive after a year, you know, where we've seen a huge dash for fossil fuels after the invasion of Ukraine. So really one of the big signs of success here will be, at least at the very least, countries committing to try at least to keep the goal of 1.5 degrees Celsius alive.
But what commitment can we actually achieve here? So first of all, we don't have China. I mean, they're still the biggest emitters of gases around the world. Of course, Russia is not present. So even if we have the 100th head of state here committing to something, are we going to reach 1.8, 2, or is it just a directional travel that we care about more?
I think at this COP is the direction of travel now. While we're not going to see sort of massive international pacts and agreements, I do think it's a COP where it's interesting looking at the smaller deals that are going to be announced. So in Glasgow, we saw this initiative for the just energy transition in South Africa, $8.5 billion to help South Africa transition off coal to renewables. We're going to see this afternoon, hopefully, a final agreement on that. And if that agreement then will serve as a blueprint for similar deals in Indonesia, in India and Vietnam. So really what this COP is about is a lot of the nitty-gritties of climate financing. How can we help the poorer world, the developing world, transition away from fossil fuels? So a lot of the devil will be in the detail on this one.
John, we promised money, right? The rich countries promised $100 billion annually to some of the poorer countries. So now we talk about loss and damage. I know it was a great Bloomberg scoop. You have a fantastic team on the ground here. But actually, unless the U.S. really commits money, like hard cash, unless some of the big ones say, like, this is what I'm funding, do we really get anywhere? Or is it still just talk?
So there is this credibility problem. You're absolutely right. So the global north has started to talk about loss and damage. It is on the agenda, finally, as a way to keep the developing world on the train, so to speak. But really, when President Biden comes here at the end of the week, that's going to be one of the big questions that he's going to be asked: is when is the rich world going to step up some of the promises that we've seen? Another interesting highlight to watch, actually next week, President-elect Lula from Brazil will be here.
This is a U-turn, right, for Brazil?
Absolutely. Well, it's a huge surprise given where we were 2 years ago in Brazil. And I think what Lula brings to the table is this new vigor to save the Amazon. And I think him coming here will, again, put a lot of the rich countries maybe on the back foot. He will certainly be an advocate for the developing world in their demands for more money to help them adapt to climate change.
John, talk to me a bit about finance. So I know we covered together, of course, Glasgow, what's happening with GFANZ. Then there was rumors about maybe, some of the big asset managers dropping out. Is it better to have a broad church? I mean, can we actually expect something, where you say, look, maybe we'll be less ambitious, but we want everyone to at least commit to the pledges?
Yes, I mean, that is the big question about the banking system, like just how committed are they to the idea of getting their loan portfolios to net zero by 2050. I think advocates of this broad church would argue this has been a very difficult year for climate change, for the climate movement, given everything that we've seen in Ukraine, given the fact that we have all of these other energy priorities. So advocates of a broader church would say that, look, this year, next year, the year after, let's just keep everybody together, going in the right direction. I think eventually, 2, 3, 4 years down the line, if GFANZ and other initiatives like it are to have credibility, then banks are going to have to commit themselves to sort of tighter goals. But right now, given the amount of regulation that's coming from Brussels, coming from Washington, a lot of banks are really nervous about signing up too much to this. Also important to bear in mind, this is all happening against the backdrop of the midterm elections. Banks are very worried about attacks from the Republican Party about being too pro-woke capitalism, etc. And so it feels like this is a year where, when it comes to the banks, it's like, let's keep this broad church together, and then maybe in a few years' time, let's see what more we can do.
Right. Well, following all of the developments. Of course, John Fryer, our executive editor for Bloomberg Green. First of all, pick up the magazine. Is it available for everyone, or do you have to be a participant?
You have to be a subscriber.
You have to be a subscriber. Okay, so you can get it. You just have to pay for it. But John has a great team.
The website is free this week. The paywall is lifted.
The website, it's true, we got rid of the paywall, actually, for Bloomberg Green for 2 weeks. So read all of the things coming out of COP27. Now, coming up, equities in Hong Kong advanced earlier as investors look beyond risks over China's virus policy. So we'll get more on the China reopening story. That's coming up next, and this is Bloomberg.
Inside the boardroom. Let's suppose you win a proxy fight or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 at Sharm el-Sheikh. Now, there's one person that you want to speak to. That's the Dutch Prime Minister Mark Rutte. We have about 100 heads of state showing up. Of course, here it's about implementation. It's about action. It's not really any of these lofty goals that maybe we were promised and given at Glasgow, Paris, and certainly Kyoto, but that was a long time away. I am delighted to be joined by Mr. Mark Rutte, the Dutch Prime Minister. Thank you so much, Prime Minister,
good to be here.
For joining
Good
us.
to see
You're
you
actually
again.
the first head of state interview that I have here, so give me some hope. What are you expecting? What are you here to achieve? What would be a good thing?
I will be optimistic. It will not be easy because there will be many issues, but you feel the sense of urgency that we need to get to implementation, that we have to work on everything to make the 1.5 degrees still attainable, but also to get Africa on board. And of course there are the issues around financing for Africa, loss and damage, but I think we can create this week and next week an atmosphere of dialogue.
Atmosphere or hard money? Because this is what, I mean, when you look at loss and damage, the developing nations want money to say, like, look, I've been wrong, you guys have done the emissions, I have the floods, pay me.
Yes, I understand that reasoning. At the same time, we already are, at this moment, committing the 100 billion to help the rest of the world also, and also the global south, to get on board with tackling climate change. But obviously, we need to listen to the arguments and to take it from there. So I will also, in my speech, address loss and damage. I will say that is a fair debate to be had, but we cannot allow ourselves to get stuck in that and not to move to what is really necessary, which is now to roll out all the plans.
Yeah, so when would you be ready to give some money? Or when do you think the Nord countries The West countries, I don't know how you want to describe them.
We have to work on the 100 billion. So what the Netherlands is doing, we will, over the next couple of years, increase our climate spending geared towards the 100 billion from 1.2 billion to 1.8 billion. And given the size of our economy, that is a big amount of money. We will make sure that as part of that, we will commit 300 million in grants discussing climate adaptation, addressing climate adaptation, which of course for my country, being for half of the country below sea level, is a key issue with a lot of knowledge in my country to deal with that. So on this issue, we want to really take the lead with others, of course, to make sure that we can solve that debate on the 100 billion.
Do you think that when you look at all of the climate action, we would be further ahead have we not have to deal with inflation? So are Western heads of state distracted by the crisis? And, you know, it's a good distraction. It's like the crisis, the inflation, the cost of living. And could we have achieved more if we hadn't had that in the last 12 months?
Yes, of course, and what is behind that is the terrible Russian attack at Ukraine and the unprovoked aggression of Russia against Ukraine, which we all are condemning. It's crucial also to get the hearts and minds of the Africans on board on this. I just spoke with the Tunisian Prime Minister, who has voted in favor of the UN resolution blaming Russia for what it's doing in Ukraine. So many African countries are really getting on this narrative and not believing Russia that it is the West which somehow started this. No, it is Russia starting this, which has an impact on food security. So food security will be part of these 2 weeks. Water will be part of these 2 weeks. But you're right. The fact that this war is going on is impacting inflation, is also impacting, let's say, the re-emergence of coal as an in-between necessary means of getting electricity done. But of course, it should be limited in time.
Prime Minister, I also want to talk to you actually about China. So we know that the U.S. has been lobbying ASML to stop, selling some of the productions to China. What's your stance on that?
We were working very closely together with the Japanese, with the Americans, on the whole issue of tech, and how we make sure that on this we really coordinate our actions. That's all being done behind the scenes, not something I can really talk about all too openly in an interview like this, but there is a close coordination. I'm visiting Seoul next week, so this is really high on the agenda. We are really coordinating with Asian partners, but also with the Americans.
But do you think that China today is a reliable partner still? Trading partner?
China is the second biggest economy in the world. Of course, we have worries about many issues around China, but at the same time, we also need to maintain the dialogue with China. And I really believe that it is that two-track approach, and we should not be naive. So discussing the issue of tech and also the export of the latest technology itself is a legitimate debate, which we have amongst our partners.
What do you think of Olaf Scholz's visit to China?
I understand the visit because, for two reasons. There is a large interconnection between the Chinese and the German economy. And secondly, by making this visit, Olaf Scholz was also able to address some other issues, like the Chinese stance against Russia. The fact that China has also committed itself by saying we do not accept nuclear weapons to be part of the Russian-Ukrainian conflict, and also addressing human rights issues. So also here, a visit like that is also an opportunity to address all the other issues.
Do you see Europe holding together in their fight for energy security and holding front to Putin?
Absolutely. Everybody is convinced that this is not just a European fight. Nobody in the world can sleep safe at night as long as this conflict is still continuing. Not only in Europe, not in Africa, not in Latin America, not in Asia. This conflict has to stop. Russia needs to lose this. Ukraine cannot lose this war, and we all have to support them.
Mr. Rujo, just because I have you here, and this is a great addition, are you decarbonizing your life? I'm starting to read it. Is there anything that you've done in the last couple of years to actually make it better?
Well, one of the things is that I myself do not believe in getting more stuff in my house. So I try also with my friends to tell them there is a moment when you have enough. Maybe one more book or one more whatever, but stop collecting and gathering more stuff into your home. And that's also helping, I think, here.
Yeah, I have the same.
And if you collect new stuff, then make sure that it is in a climate-friendly way.
Yeah, I do that. One in, one out is a rule of the household.
That's great. And when you have a small house like me, you need to do that, otherwise you get stuffed.
There you go. Well, you're in the next edition of
Absolutely.
Thank you so much, Prime Minister, for joining us, the Dutch Prime Minister there, Mark Rutte. Now, we're going back to, of course, one of our top big stories, and that's China and some of the things going on there. Traders are hoping of an earlier than expected reopen. We're a little bit disappointed that their hopes dashed. So let's get straight to our reporter on the ground to see exactly what happened with the commitment to COVID zero. Jingsheng Han, talk to me about what happens next.
Exactly. So actually here in Hong Kong, we are seeing stocks climbing again today, even though China actually said it will continue to stick to COVID zero over the weekend. So there's a lot of hope that the COVID zero policies will come to an end. However, a lot of those information that are circulating on the ground are actually unverified. So what we actually bring to the table is that we just launched Bloomberg's China COVID dashboard. It features exclusive data points that showcase China's COVID outbreaks by province. And we hope this will be helpful for investors and China observers to understand where the impact will be if the more cases are showing up. And today we are already seeing like 6-month high of COVID cases, and that's something we will continue to watch.
Okay, Jingshan, thanks so much. Jingshan Han there for the very latest on China. Coming up, we'll have plenty more on tech. Tech in trouble. We look into the outlook cuts and layoffs announced by some of the major players. That's coming up next, and this is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London.
I'm going to be watching retail earnings from both Home Depot and Walmart.
Then surveillance for in-depth analysis.
Alongside Tom Keane and Elisa Abramowitz, I'm Jonathan Ferro. Across the board, these are good numbers. And a big headline there is reaffirming the outlook.
How much does this give faith that you can get some sort of resurgence in consumer spending?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game. From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 in Sharm el-Sheikh, Egypt. Now joining us to talk about COP27 is the Prime Minister of Norway, Jonas Store. Thank you so much, Prime Minister, for joining us. You are our second head of state today. So what are you expecting from COP27? And it's great that you showed up. Norway relies so much actually on oil and gas. How difficult is the transition?
Well, I mean, the first objective is to keep the pressure for 1.5.
Yeah.
We have to keep that hope alive.
Yeah.
Every digit here will matter. So I hope we can deliver result and progress that demonstrate that the world community is moving in that direction.
Do you think we'll get it without China here?
Well, that's a big complication, and the war in Ukraine is another big complication. War is bad for everything, also for climate work. But, you know, first, we have to stay committed to cutting emissions.
Yes.
And Norway, for its part, is reinforcing our pledge. So we will now be at 55 by 2030, together with the rest of Europe. And then we have to make progress on some of these key issues, such as shipping, forests, vulnerable communities. And there are a lot of things going on here which I think can give us hope and inspiration to move forward in the aftermath of the conference.
Prime Minister, cutting 55% emissions from 1990s is extremely ambitious. How concretely will you achieve this?
Well, we have to move to renewables. Norway is leading that way with offshore wind, which is going to be our major investment. But also, believe it, in solar, we can do major progress. We have to succeed in carbon storage, cutting the carbon emissions and store them. Norway has done that for 30 years on our continental shelf. So there's a lot of technology we can bring to scale. And then you have to do it throughout society, you know, in transport, in waste, in energy, with clear targets and with clear incentives. You have to make CO2 far much more expensive, as we are increasing our taxes. And then we have to push the transition, which I believe is possible.
But, Prime Minister, I mean, philosophically, you make so much money, right, with one hand, and then you want to do renewables. Is it useful to have high oil and gas prices to be able to fund renewable projects? Do you think it accelerates it? Or
I can tell you that it is not in Norway's interest to have these hikes in energy prices. I'll give you two reasons. Immediately, back home in my country, this is driving up electricity prices, hitting households. Secondly, you know, stability in energy prices at a low level is good for the world economy. It's good for the European economy. So we make every effort to provide Europe with gas in these difficult moments. We have increased gas export from the Norwegian shelf by 8 to 10% over the last months. That is important for storing gas in Europe. But then we have to move forward and push for this renewable transition, which paradoxically, after the war in Ukraine, can come much faster than it had planned. And that's necessary. Yeah, I think it is. You know, I think really the awareness in the European Union that you have to go big on offshore wind, on solar, on hydrogen, on carbon capture and storage, you know, much greater awareness now than only 10 months ago.
do we have the building blocks to be able to transition?
Yes, we do.
So, I mean, are we not lacking cobalt? Are there certain components that actually need to be better at getting to scale?
Rare minerals and all of that in part of it with battery factories and so on. But, you know, building the offshore wind installations, be they permanent on the seabed or floating, as we now can do, depends on all the experience we have from the oil and gas industry. So the most complex platforms gives us engineers and workers who can really make these new installations. So it's very much about political will and investment, and Norway will be leading in investing in this because this is the future.
The Prime Minister, Norway has also been one of the clear leaders in electric vehicles. Will that continue? How will that continue?
After 2025, you will not buy a fossil car in Norway. And the sales of cars in the last quarter of this year is at 80 to 90% at electrical vehicles. So this is happening, and to do it, you know, you have tax incentives, you have to build the infrastructure for charging, and then people come along.
The winter months are going to be extremely challenging in terms of energy security. Do you worry that Europe will splinter because of this?
I think it's going to be a tough winter. I think now with the gas storage in place, I think we are, you know, pretty safe, but it's going to be hard for European industry. Prices will be still not very stable. Ukraine will be suffering. You know, we are trying to see how we can support Ukraine in getting gas for their use. So I think it's going to be hard, but I think politically it has been remarkable during these months that politically Europe has been very consistent in supporting Ukraine. And you know, we are a small European country. We are neighboring Russia, and we are sending a clear message. You know, we can not let that happen. We cannot let a big country use its military force to invade the neighboring country, and as we see before our eyes now, bombing this country, its infrastructure, its energy and its water. So it's important to stay united politically. And then hopefully at one day, this terrible war can end and Ukraine can have its right. And I hope that will happen at the negotiating table.
So what should be the main message? If you're a politician in Europe today, your biggest challenge is probably to get the citizens behind you in these tough winter months.
If we do this separately, we will all lose. So we have to have strong cooperation, securing energy coming in. Here Norway can contribute. Then we have to have burden sharing, so that if we have to use less energy, let's do that together. And then we have to push in a big way for these new renewables, because the shortage we will have now in a couple of years is a pause. And then we may have a lot of energy if we really invest and build. And around the North Sea, you have Norway, UK, Netherlands, Belgium, Germany, and then Denmark and Sweden. We can build a network of offshore wind, which, you know, in a few years' time will be there providing our economies with energy.
That will happen?
That will happen, you know.
That will 100% happen. There's commitment from
we
you
have
think you'll have enough commitment?
We will build 30 gigawatts of hydro wind coming from our shelf. That means that we will go from 5 to 1,500 big windmills. And the plans are being laid out from now and through the 2030s. And then that has to coexist with gas, because gas is a stabilizing energy when you go for sun, solar, and wind. But in order to do gas, and gas can also give us hydrogen, we need to capture the carbon from the gas and store it. And Norway now has a full value chain that can deliver that service. We can capture gas from waste plants, from the hard to abate industries, from cement, or from gas production, and we can store it 3,000 meters under the seabed, and it stays.
Prime Minister, given all of these challenges, do you think inflation is coming down a little bit? Is that hopeful, or do you see the signs in the economy?
Well, that's the main priority now for me, is to make this inflation chapter as short as possible. So, you know, the central banks do their job, and interest rates have gone from 0 to high level, and we have to hold back in our budget policies, not to push that. So I hope when we get into 2023 that it will stabilize and then hopefully can come down. But, you know, there's an unknown factor here, which is the war. And war is bad for the economy, it's bad for the climate, it's bad for people, and it has to end.
So how do you expect inflation? The trend is what, lower inflation, or actually inflation staying at, you know, a little bit lower but then staying high for quite some months?
It depends. You cannot have inflation running into the 2 digits. It has to come down, you know. So it has to stabilize and then come down, so that households and businesses can plan predictably on the future. Inflation is bad for planning, and we have to get it down.
Okay, Prime Minister, thank you so much. Jonas Gahr Støre there, the Prime Minister of Norway, with a robust conversation on some of the challenges ahead. Now, let's get straight to a market check. For that, let's go to Danny Berger in our London office. Danny, what do you have?
Well, Francine, the Prime Minister is saying there that inflation has to come down. It's certainly something markets are hoping for. A pretty sizable rally started in Asia. Really, valuations there have been so depressed when it comes to China and COVID-0. So despite officials over the weekend saying, hey, we are sticking with COVID-0, folks, we're still buying the rally. Now, we started out this morning with a negative European cash session and negative U.S. futures. Both of those have turned around. So you're looking there at S&P 500 futures up 0.4%. In Europe, it's a gain of 0.5%. Perhaps, again, it is this idea that valuations are lower. The sentiment is so depressed that you are looking for anything to buy. One of the things that's also aiding us in this ability for equity markets to rally higher is a softer dollar this morning. It was soft after NFPs on Friday, so it's continuing for a second trading day, despite the fact that yields off the highs, but still pushing higher up 2 basis points. Now, tech is a big part of the story as well. Apple is down pre-market by about 1%, and it's said to have trimmed its iPhone 14 output by 3 million handsets as demand softens. The Wall Street Journal reports that Meta will also begin laying off thousands this week. And in other tech news, Twitter is now asking for some fire staff to return. So, Francine, while you reset at COP29, I want to get into the tech conversation with Bloomberg's Charlie Wells, who's on set with me now. Charlie, starting it off with Apple, which had been more immune from other tech to the bad news, but we got bad news from them this morning.
Right, so they were able to maintain strong demand for the past 2 years, while a lot of other handset makers really struggled with that. They were able to really navigate somehow through a lot of these supply issues, but we're seeing both of those headwinds start to hit the company. So for its iPhone 14 Pro, they're really struggling with some of these COVID lockdowns in Zhengzhou in China. And also on the demand side, we're actually seeing that more affordable iPhone 14 that was supposed to, bring in a wider swath of consumers, there's softer demand for that, and that seems to be what's responsible for this cut in output.
And it is tech, to be fair, that seems to be running into these issues. Of course, a different business model, but Meta as well. We learned at least a report from the Wall Street Journal about letting folks go, and this follows on from last week, a lot of negative news.
Right, so much bad news in the tech space, and now we're really seeing it kind of come to play with employment. And as far as this report about Meta, it seems like thousands of jobs could be affected by layoffs. These could start as soon as Wednesday, and we do know that staff have been told to stop making non-essential travel, so this is serious. When you think about Twitter, too, some of the news that we're seeing there is that actually, the company laid off 3,700 workers. That's a huge number last Friday, but then in a reversal told dozens to come back, that maybe they were fired in error or that they were too valuable to certain projects. So a lot of change in Silicon Valley.
And apologies, Charlie, we didn't get enough time to get into Twitter, but to be fair, we'd probably need an entire hour for that. So
yes.
best we save it anyway.
Yes.
Charlie, thank you so much. Bloomberg's Charlie Wells there on tech. Now, coming up on the program, we speak to World Trade Organization Director General Njoja Ngoyiwela. Don't miss that live interview from COP27 in Egypt next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP27 Sharm el-Sheikh. Now, joining us now is Dr. Ngozi Okonjo-Iweala, the WTO Director General. Dr. Ngozi, thank you for joining us. As always, when you look at climate change, what can trade do to help in the advance of stopping climate change?
Thank you. That is a really important question. And actually, that's why we're here at the WTO. We are launching a trade and climate report, our flagship report that shows that, look, without trade and good trade policies, you cannot get to net zero by 2050. If you want technologies that will help with renewables, for instance, with helping mitigate climate change, trade helps to move them from where they are produced and made to where they are needed. Without trade, you cannot do it. Environmental goods and services. If we allow a free flow of trade, we lower the tariffs on these goods, this will help with adoption of these technologies. So trade is critical in so many ways.
So Dr. Ngozi, concretely, what does that mean?
What that means is that when countries are looking at their nationally determined contributions or plans, the promises they made, when they are revising them, they need to stand back and say, have we incorporated trade? Have we thought about what to do with environmental goods and services so they can come in cheaper, so we can produce them more, so we can disseminate? And, have we thought about diversifying supply chains for these products so that we mitigate risk? So there's so many aspects of trade that have not been factored into plans, and that's what it means.
And so that will change from now on. Dr. Ngozi, the EU, Korea, and China have all said, criticized America's Clean Energy Act, right? The Inflation Reduction Act, and they've threatened to file a WTO dispute. Do you think this violates some of the trades?
Let's put it this way. I want to make it clear that WTO rules encourage our members to take as many steps to reduce carbon emissions as they possibly can. What we don't want is rules that discriminate in favor of domestic products against like products elsewhere. Now, some of our members feel that perhaps the Inflation Reduction Act may have elements of subsidies that are discriminatory against their own like products. They are talking to each other, and that's what we prefer. We don't want disputes to come to the WTO. And I think those talks are advancing, so we'll wait and see how they shape up.
But do you think that actually countries should get a free pass if it's to help climate change? So should we look at it through a different lens, even if it's subsidies?
It depends. There are subsidies that are helpful towards reduction of carbon emissions.
Right.
If they do not, in the WTO, violate or discriminate against other members' products, then it's fine. That's it. So if you're going, there are good subsidies that can help us in this fight against carbon emissions and climate change. And we don't have any problems with that. We just need to make sure that other members do not feel this is militating against their own output and production. We don't want a subsidy war. We don't want it to degenerate to the lowest common denominator where, countries cannot compete because they don't have the money to give these subsidies.
Do you worry, Director General, that, for example, the fisheries agreement, I believe, took 22 years to come to fruition. Do you worry that maybe some of the efforts surrounding climate change take so long that we miss targets, that actually, despite your best efforts, the concrete action will just not be there?
Well, as you said, Francine, the fisheries subsidies agreement was going for 21 plus years. But we finally got it done last June. And we've shown that, look, I as WTO DG am totally impatient. I don't think we should spend that kind of time on agreements. So with respect to climate change, it is with us. We're seeing the evidence. So we can't afford to waste time on coming to any necessary agreements.
So it's been a year since you've also talked to EU policymakers about a EU carbon tax. Where do things stand right now?
Well, look, there are 70 fragmented carbon taxes and approaches in the world at this time. It's a very fragmented approach. It's good that domestic policymakers are thinking of what they should do within their countries to try and lower carbon emissions. So we're all for that. I think our issue is that with 70 different systems and more coming, we need to think of what that means for businesses. How do they comply? Developing countries also begin to see some of these and wonder, are they protectionist or not? So what we are advocating at the WTO is a global approach, a global carbon price. And we're working on a framework right now that would lead to a global carbon pricing system that will take into account the contribution of countries to carbon emissions historically. It will take into account the level of income, differentiated responsibilities, as was acknowledged in the Paris Agreement. It will take into account the target for below 2 degrees Celsius. And if we are coming up with a framework that will show what would be the carbon price at different levels of development for different types of countries based on these parameters.
But do you worry, DG, that actually EU carbon border tax is in contravention of some WTO rules if it comes in place like that?
Until the carbon border adjustment tax is implemented, the devil is in the detail. So you know, in theory, we are not against, but if in the implementation there are issues that result in protectionist approach or discriminatory measures, then there'll be a problem. Right now, we are not there yet. It's the implementation that is going to be key.
We were talking also about the need, of course, for some of the rare earths, but one of the other things, for example, cobalt needed for some of the renewables, you know, as we transition into a greener economy. This goes into also the worker rights or mining rights, for the example, the Democratic Republic of Congo. Does WTO play a role in that?
Let me tell you something. The WTO absolutely says its purpose is about people. People don't know this, but WTO's purpose, as inscribed in the agreement that set it up, says it's about enhancing living standards, creating employment, and supporting sustainable development. So we absolutely care, and we would not be subscribing to a situation in which there are violations of sustainability, which doesn't enhance the living standards of people who are involved. Absolutely.
So what's the right way? If you look at cobalt, we need it so badly, but we also need to protect the rights of miners.
The right way is that businesses who are extracting this should, one, not use children to do the work, because that is not right. They need to be in school, should pay the workers a living wage, and should mine in a fashion that is sustainable, and that we need to pay the right price for this. You know, when the people who mine get a pittance, when you look at the final price of the product compared to what they receive, this is not right. So we need to fix all of that. This is a doable proposition, and we should do it.
Director General, overall, you're hopeful that we'll achieve something at COP27. I know this is about implementation and adaptation, so we're not expecting the big headlines that we've seen in the past. But are we going to get action?
I think we need to get action. So
that doesn't sound optimistic, DG.
I'm hopeful. I think we should come out of here with at least one or two things agreed. I don't want to be Pollyannish or too optimistic, given where we are in the world with all the crises. Policymakers are completely overwhelmed with fighting inflation, energy price, the food prices, you know, debt, distress in poor countries. But I hope we can come out of here with specific packages for a few countries, developing countries, that will enable them move forward, and agreements on what to do. For instance, moving forward on loss and damage, on adaptation, you know, and so on. In fact, trade is an adaptation tool, so I hope we can also make that point. And so there are some things we can agree on here that should help us move forward.
Director General, thank you so much for joining us. That was Dr. Ngozi Okonjo-Iweala, the WTO Director General, joining us at COP27. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gertz. Hi, Leanne.
Hi, Francine. UN climate talks in Egypt have begun with a deal to discuss how rich countries can help pay for the damage caused by global warming elsewhere. The breakthrough will allow discussion at the COP summit of what's called loss and damage for the first time. Industrialized nations have repeatedly blocked this from the agenda despite demands from developing countries. Now, Ryanair has lifted its passenger goal for the year, downplayed the likely impact of a recession. Europe's largest discount airline says earnings should top €1 billion in the year to March.
Very strong forward bookings and fares into the October school midterm. Christmas looks very strong. Next Easter already, next summer looks strong forward bookings. But we'd be cautious into this winter again. Everything looks good. I mean, what's unusual is this time I think we're going into a recession with full employment. People do seem to be spending, and they're certainly travelling.
Now, the US and Russia are reported to have held private talks in recent months to reduce the risk of a broader conflict over Ukraine. According to the Wall Street Journal, a peace settlement wasn't a goal of the discussions over the weekend. Ukraine's grid operator says it was limiting power supplies to Kyiv and 7 other regions because of damage from Russian strikes. Warren Buffett's Berkshire Hathaway has reported a 20% surge in operating income for the third quarter to $7.76 billion, thanks to its utilities and energy business. But its insurance underwriting segment absorbed a loss of close to $1 billion. Berkshire's cash pile increased slightly to $109 billion. Facebook's parent Meta is reportedly planning layoffs that will affect thousands of staff from this week. The Wall Street Journal reports job cuts could be announced as soon as Wednesday, with employees already told to cancel non-essential travel. Meta is struggling with the growing losses from its metaverse business and a slowdown in its legacy products. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, U.S. voters go to the polls for the midterms. More on that story after the break. This is Bloomberg.
Inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
This month, Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio will have complete coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage begins November 7th, only on Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition of Francine Lacqua here in Sharm, COP27. Now, we'll have plenty more exclusive interviews throughout the day. Danny, I'm also really looking forward to speaking to the World Bank president, David Malpass, a bit controversial on his stance on climate change. That's an exclusive for tomorrow, and then, of course, we'll follow all of the markets throughout the day. But now, let's get straight to the markets with you. What do you have, Danny?
Well, Francine, look, it's a week of a lot of risk events, be it, continued conversations we're hearing with you from leaders, be it midterms, or be it CPI on Friday. So what do you do in the meantime? What do you trade on? It seems like we are trading on positive sentiment coming out of China, despite the fact that it is just rumors. Rumors of reopening when it comes to COVID-0, yet officials continue to say that COVID-0 is here to stay, despite that up 1.7% on MSCI Asia Pacific Index. You're also looking at S&P 500 futures. Those are on the highs of the morning as well in European stocks. That cash market trading is underway. That's up 0.5%. Perhaps what's happening in equities this morning is also a weaker dollar. That's aiding equities despite the fact that you're seeing a 2-year yield which continues to climb higher. The 10-year yield, that is lower. So equities might like that better, might like a lower 10-year yield, not trading on the front end of the curve. But one fly in the ointment of this morning's futures trading is Apple. Apple is down 1% after Bloomberg report that due to COVID lockdowns, you are seeing slower demand. Apple is pulling back on their production of iPhones. Meanwhile, the Wall Street Journal reporting that Meta is firing thousands of staff, yet we are seeing shares moving up 3%. So one of the risk events I mentioned, it's tomorrow's elections, and they're expected to usher in a new era of divided government in the U.S., with polls showing Democrats could lose control of the House and possibly the Senate. Joining us for more on this is our very own Bruce Einhorn. So, Bruce, what has caused the reported swing in this momentum in favor of the Republicans in the run-up to these elections?
Well, Danny, there are some historical reasons at play. Democrats face an issue where the party that controls the White House hasn't actually had a good midterms election since 2002, back in the George W. Bush administration. So there have been 2 decades of pretty disappointing results for the party in charge of the White House, and so it's possible that's what will happen again tomorrow. Add on to that, you have the economic issues like inflation, high gas prices. Those are all in the Republicans' favor. Democrats are hoping that issues like abortion and threats to democracy will help turn out their voters and help to push back against what could be a Republican wave.
All right, so a lot to digest then. So as voters head to the polls, what will the key issues be for them?
Well, again, so for Republican voters, what they're telling pollsters is they care a lot about the economy. They care about high gasoline prices, inflation, the possibility that there's going to be a recession coming up. Democrats are very concerned about abortion rights following the overturning of Roe v. Wade earlier this year. They're worried about threats to democracy, as many Republican candidates who are running are election denialists. They're worried about the possibility of the return of Donald Trump. So those are the key things driving both sides.
Okay. Bruce, thank you very much. Bloomberg's Bruce Einhorn there on the coming election. It is interesting, there does seem to be a divide among strategists about how crucial these midterms are to deciding where equities go from here. Mike Wilson over at Morgan Stanley does say that he is staying bullish ahead of the midterms, that there might be some near-term uncertainty before ultimately providing a catalyst for lower bond yields and higher equity prices. He says a win could be enough to invoke the kind of rally in 10-year U.S. Treasury bonds to keep the equity market moving higher. And that is what we're seeing this morning, an equity market that continues to rally. Well, Bloomberg Surveillance Early Edition, it will continue in the next hour. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the illiquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
November 8th, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections. We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tune into Surveillance live from D.C. at 6 a.m. on Wednesday for the latest overnight. This is Bloomberg. Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
Been saying that this market is going to be choppier and lower for longer because it will be determined by how high the Fed go and how long it stays there.
The economy is not responding to the Fed's tightening, and so they've got a lot more work to do.
We're not seeing cracks in the labor market yet, and so the Fed is going to have to continue on its path.
The fundamentals are still very positive. There is still positive momentum in the labor market. There's still dislocations. Demand is still very strong.
I think what we're starting to see now is us transition to a slow and steady economy as we move forward here.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
10 a.m. in London, 5 a.m. in New York, 6 p.m. in Hong Kong. Our top stories today. China sticks with COVID zero and delivers downbeat trade data. But investors in Hong Kong and elsewhere don't care. They keep buying, even after big gains Friday. Tech, though, cutting back. Apple is taking a big bite out of expected iPhone 14 production. Meta gains on a Wall Street Journal report that thousands of layoffs will start this week. And U.S. politicians deliver their final messages ahead of the midterm elections that look too close to call. Turnout, though, is expected to be high. Welcome to Bloomberg Surveillance, Early Edition. I'm Guy Johnson in London, Madison Mills and Kaylee Lines in New York. Anna and Matt are both off today. Kaylee, China still seems to be dictating the narrative.
Yeah, what's interesting, though, is what you are hearing from Chinese officials kind of runs counter to what you're seeing in the markets. Chinese officials over the weekend vowing to be unswervingly committed to Beijing's approach to stamping out COVID, aka COVID zero isn't going anywhere, and yet equities rallying despite that. The Hang Seng China Enterprise Index up about 3% overnight, tech stocks up by about 4%, so equities largely shrugging off the COVID zero story. Also shrugging off the story that Guy mentioned, Apple slashing its iPhone 14 production outlook by about 3 million relative to what was originally expected. So that raises some big questions about demand, but again, not really showing up in equities. You are seeing concern around COVID zero perhaps showing up a little bit more in other asset classes like in foreign exchange, where the Chinese yuan is the big underperformer among the Asian currencies, weaker against the US dollar by around 6 or 7/10%. 723.47 is where we trade on dollar offshore yuan. And interestingly, you you saw iron ore futures down originally in the Singapore session, now actually up by about 0.5% as we continue to contend with the demand picture from China. As for what the picture is looking like here in the U.S., we are seeing futures moving higher, so following on some of that risk-on sentiment, only up about 0.2% or about 8 points on S&P E-minis. In the bond market, just the slightest bid coming in after 3 days in a row of yields moving higher. We're down the better part of 2 basis points on the 10-year to 4.14, and remember, the 2-year is up around 4.70, so we do have a very deeply inverted yield curve. The dollar is a little bit weaker on the day, giving back earlier strength. The Bloomberg Dollar Index down by about 1 to 0.2%. And then I wanted to point to natural gas futures, Guy, up about 8% on the day. You have a winter storm coming in the Pacific Northwest. It's going to get really, really cold across most of the U.S. over the next week, the first big cold snap of the season. So that's lifting gas futures higher, Guy.
Fortunately, over here in Europe, we're still dealing with relatively warm weather. Long may it persist, of course, given what's happening over here with the gas shortages that could be experienced if it does turn cold. Let's talk about where we are in Europe with the European equities. Broadly positive. London and Paris both outperformed Friday. London because of the miners, Paris because of the luxury story. That was China related. Today they underperform a little bit. The DAX, though, is up by around 0.7%. We've actually had some fairly good economic data out of Germany today. Let's talk about some of the other assets that we're focusing on. We've got, those are the US, that's the US data. Let me talk to you about what's happening with European data. European stocks broadly mixed. You are watching, here we go, the German 2-year. Keep an eye on what is happening there. You are seeing a little bit of move lower in yields, a price moving higher. You've got the governor of the Banque de France this morning sounding very hawkish. He's normally fairly mixed in terms of his approach to where monetary policy is going, sitting between the hawks and the doves. Today sounding very, very hawkish. And you do have a little bit of a rollover in crude, but we are still trading around 98.27, so we're just sub 100 on what is happening there. Again, the China story front and center. And that really continues to be the story that is driving global markets. But tech is not far behind, Madison, and that, I suspect, could take over a little bit later on.
Well, certainly traders' hopes of an earlier than expected reopening dashed after China reiterated its commitment to COVID zero. Last week, China locked down the world's largest iPhone factory, impacting Apple's supply chain, of course. Apple now expecting to produce at least 3 million fewer iPhone 14 handsets than originally anticipated this year. Bloomberg's Charlie Wells is joining us now for more from London. Charlie, always a joy to see you. What is the bigger problem for Apple here as we head into the end of the year? Is it these lockdowns on the supply side, or is it a slowdown in demand?
Maddie, great to see you. And this is a really excellent question here. And what I would say is it really comes down for Apple, at least, to demand. This is a company that is so discretionary. It really relies on this idea of consumers, paying more for the joy that they get from these products. So if that demand continues to slow down, as we've been seeing it for the iPhone 14, that could spell trouble for this company. Of course, I don't want to understate the supply issues that they've had. This is probably the biggest supply headwind that they have faced with this China lockdown. But really here, I think it's demand.
Cuts across the board, it seems. We've been talking about Twitter over the last few days. The reaction to Meta's last set of numbers was not good. The concern was always around how much this company was spending. Now we're starting to see stories emerging. The Journal this morning reporting that we could see thousands of layoffs this week.
Slowly but surely, we're starting to see some of the issues that people have feared for weeks. Remember in September, Mark Zuckerberg talking about a potential reorganization at Meta, about people who weren't fitting in at the company, who didn't like it, maybe needing to leave. Well, what this report is telling us is it could be potentially thousands. It could start as soon as Wednesday. People have been told that they should cut non-essential travel, and that comes on the tails of Twitter, of course, laying off 3,700 workers, and then, of course, over the weekend, having some of those layoffs be reversed. So it's anxiety in Silicon Valley in a way that we really just haven't seen before.
Yeah, Bloomberg's Charlie Wells, thank you so much. It continues to be a roller coaster. And of course, there was another U-turn from Twitter. They're not going to make everybody pay for those blue checks until after the midterm. So that will begin on Wednesday. Let's turn now to a call from Goldman Sachs. It has lowered earnings estimates for the S&P 500 for each year until 2024, saying that margin contraction in the third quarter signals more pain ahead. For more, we're joined by Bloomberg's Danny Berger. So Danny, quite a call.
Quite a call, and Kaylee, the reason it is so important is that at this point in the cycle, we're all trying to judge, has there been capitulation? Are valuations cheap enough? Can we jump in yet? Are things bad enough? Well, valuations only look attractive if you are assuming that we're going to get earnings growth next year. If earnings are going to fall, or if they're flat with Goldman Sachs' new call, it does mean that we are still expensive on a price to earnings ratio. So Goldman's saying, look, we previously overestimated the margins that would be maintained by companies. There's going to be greater margin contraction than expected. That means S&P 500 growth for next year, it's going to be 0% when it comes to earnings. It was at 3% previously in their view. If we have a recession, though, then EPS will fall 11%. And in that scenario, it is a very difficult call to say that stocks are attractively valued. Now, we do have JP Morgan saying that, look, yields are likely to peak in treasuries, and that does mean that all of a sudden equities are attractive. So this is the debate. Are earnings or are yields more attractive? Well, I'm going to combine them both for our radio listening audience. I have what's typically called the Fed model. It's income from stocks versus income from treasuries. This is one way to look at valuations. Well, if we are peak now and yields stay where we are, it still is very challenging math for stock valuations. The premium you get on earnings from stocks is at its lowest since 2010. If yields are going to look attractive, if we're going to get a premium back for equities, either we need to see a pretty big pickup when it comes to treasury prices, or stocks need to tumble, or earnings need to be very strong. Kaylee, considering Goldman's call, that doesn't look likely.
Yeah, so maybe Tina isn't going to be coming back to life anytime soon. Bloomberg's Danny Berger, thank you so much. Of course, we also have to consider the implications of the midterm elections and what they mean for markets. On that note, Morgan Stanley's Mike Wilson publishing this morning saying investors should stay bullish ahead of the U.S. midterm vote tomorrow. He says the midterms may present near-term uncertainty before ultimately providing a catalyst for lower bond yields and higher equity prices. Madison.
Yeah, and Kaylee, we've got a big day tomorrow because the midterms are expected to usher in a new era of divided government in the U.S., with polls showing Democrats losing control of the House and possibly the Senate. Still, President Biden saying he's confident heading into tomorrow.
We're going to win this time around, I think. I feel really good about our chances. I haven't been in all the House races, but I think we're going to keep the Senate and pick up a seat. I think we have a chance of winning the House. I don't think we're going to not win. Keep in the House. So I'm optimistic. I really am.
Anne-Marie Horton, Bloomberg Washington correspondent, joining us now from D.C. Anne-Marie, thanks for joining us bright and early. Tell us what the big headline is going to be heading into Wednesday. What do we know?
Well, at this moment, already 40 million individuals have casted their vote, so we are seeing really robust turnout. Remember, 2018 was huge record turnout for midterms. Potentially, this one is going to surpass that. As you said, Madison, we already know that the House looks like it's going to swing. A big question is going to be how big that margin is going to be for the Republicans. And then, of course, everything's going to come down to the Senate to see who is really going to control the entire Congress. Key Senate races that we're going to be really watching are Georgia, Nevada, Arizona, and of course Pennsylvania, where the president was over the weekend, as well as former President Barack Obama. Really, for me, though, last night, President Biden going to Bronxville, New York, just shows really how the Democrats are on the defense going into this midterm election. This is deep blue, and it's issues like inflation and crime that they're having the President of the United States come and really try to get out the vote, even in New York.
Amazing stuff. AMH in DC, thank you very much indeed. Bloomberg's Anne-Marie Horton. And of course, don't miss our special coverage of the US midterms on Election Day. That's tomorrow. It kicks off at 8 p.m. Eastern. Now, the United Nations climate change talks kicking off over the weekend, yesterday, in Egypt. This is the world faces threats from war, an energy crisis, and the risk of a global recession. Kristalina Georgieva, managing director of the IMF, says global inflation may be nearing its peak. She spoke with Bloomberg's Francine Lacqua earlier at COP27.
It is very possible that we are peaking. We now see central banks very united on fighting inflation is top priority, and rightly so. If we don't succeed, it would be anchor, and then the foundation for growth, which is price stability, is dented.
Bloomberg's Francine Lacqua joins us now from COP27 in Egypt. Fran, how low are expectations? China's not there, India's not there.
Yeah, expectations are pretty low, but at the same time, this was never going to be, Guy, actually one of those big COPs where we have headline numbers and great agreements. If you look at what the heads of state, 100 of them, and over 10,000 participants want to achieve is 4 goals: adaptation, mitigation, financing, and collaboration. What does this mean? They take the Paris Agreement, they take Kyoto, and actually they take Glasgow, and then try and make it work. This will revolve around 2 things: giving money to the poorer nations. This is loss and damage, something that they at least agreed to discuss. Now, they're not big hopes that maybe we get a signed check right now, but just the fact that they didn't have to have a fight to put it back on the agenda could be something pretty good. The second thing is also, this is the first COP in Africa. Remember, if you look at the emissions of this continent, it's only 3%. So we're hoping that there's some kind of financing to make sure that they don't get the fuel out of the ground and go to renewables straight away as they use more energy. And the third, of course, is finance. And that, yes, we've scaled back expectations, but a couple of the organizers say, look, maybe we're less aggressive with what we're expecting banks to do, but we get a broader church. It's all about momentum. Even if we don't achieve that much, Guy and Kaylee, it's about, moving forward and take a step instead of taking a step backwards.
All right, Bloomberg's Francine Lacqua covering COP27 from Egypt. Thank you so much, and we look forward to having her back later on this hour for an interview with the OECD's Secretary General. Also coming up later this hour, it is election eve here in the U.S., and polls show the economy is the overriding issue for voters who will determine which party is in control of Congress. We'll discuss that with Mohammed Yunus, the editor-in-chief at Gallup, coming up. This is Bloomberg.
Satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority. November 8th, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections. We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tune into Surveillance live from D.C. at 6 a.m. on Wednesday for the latest overnight. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Madison Mills with Kaylee Lyons in New York and Guy Johnson in London. Anna Edwards and Matt Miller are off today. All eyes are on the Fed's next meeting, December 14th, but we got a lot of big eco events happening between now and then. So let's just do a quick preview of what's to come. This Thursday, of course, we've got the latest CPI print, the most important since the last before the next. We have two prints coming before the next Fed meeting and another jobs report. As we know, the Fed closely monitoring that jobs market to see how the war on inflation is going. The question is, how much of an impact could these events have on the Fed's peak rate? We're going to discuss all of that with Bloomberg's Simon White joining us from London. Simon, thanks for being here. This next CPI print, the upcoming jobs numbers, to what extent are these events already priced into markets?
Well, I think when it comes to inflation, the market has been, the rates market that is, has been kind of front running a fall in inflation, and an outright fall, but actually the rate of change of fall. So if you look at that cuts that are priced in for 2023, 2024, that correlates very nicely with a fall in inflation to roughly 5.5% in the year-on-year number. And that's kind of been in the price for the last 6 to 9 months or something like that. So I think if we don't see that in the sort of relative near future, that will lead to the kind of the longer part, if you like. You know, if the Fed is going towards a higher for longer, the market's kind of got the higher part, but it hasn't quite got the longer part yet. That's not really been priced in.
The Fed looks relatively predictable compared with Chinese COVID zero. How do you price in that kind of volatility right now? How do you build it into a portfolio when you could get some really wild swings around tweets, utterances, expectations?
The short answer is you can't. I mean, if anyone is really managing a lot of money right now, they're probably considerably less risk than they had before. We've never really been in this environment of such huge uncertainty for, you know, a long, long time. And the kind of the pressure valve is inflation. Everything kind of worked in a kind of, you know, everything low volatility, stability. It was all predicated on low inflation, continuous expansion. And the more you repress something, and inflation was a kind of an element of that. When it comes out a lot, and that's where we are right now. We have this volatility's out the bottle. The genie's out the bottle. So in terms of you're running risk right now, you're not taking a lot of risk, and if you are, you're probably a bit crazy.
Well, and of course, Simon, there's the question of how inflation weighs on corporate profits. We heard from Goldman Sachs cutting its earnings outlooks out through 2024 because of margin contraction. How does that track with what we've already seen now that the bulk of earnings season is over for the third quarter?
Yeah, I mean, it was a bit of a mixed season. We had some pretty high-level kind of misses, obviously, but you know, the leading data is pretty unequivocal. You know, earnings are going to continue to fall. I think you're going to have an earnings recession probably by the first quarter of next year. And it really puts equities in a very difficult position fundamentally. You know, the multiples have been falling, margins are set to fall even further. The only thing really holding things up right now are revenues. And of course, if you're going to a slowing economy, revenue should fall. So it's from a fundamental perspective, it's very difficult to see what's going to keep equities afloat. And it's just going to make life very difficult. The bear market is here and it's going to be here for a while.
Simon, great stuff as ever. Thank you very much indeed. Bloomberg's Simon White joining us from the Markets Live team. If you want more markets analysis, and I'm sure you do, you can check it out on the Bloomberg. All you got to do is punch in MLIV Go on your terminal, and you get this, the rolling blog on what is happening in markets. Some great analysis within that blog. Check it out. This is Bloomberg.
Lots happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
story. How are you thinking about those dynamics?
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Madison Mills in New York and Guy Johnson in London. Anna Edwards and Matt Miller are off today. Now, keeping you up to date with news from around the world, here's the first word. Ukraine's President Volodymyr Zelensky wants Iran to be punished for helping Russia. Zelensky said if it wasn't for Iran supplying weapons to Russia, quote, we would be closer to peace now. Both Ukraine and the U.S. say that Russia is using Iranian drones in the war. In China, exports and imports unexpectedly fell for the first time in more than 2 years. Overseas consumers bought less, while demand in China was hurt by COVID-0 controls and a housing slump. Brazilian exports had been a major support to China's recovery in the past 2 years. Warren Buffett's Berkshire Hathaway has taken a beating on auto insurance. The conglomerate reported a $962 million loss on insurance underwriting in the third quarter. That's the worst quarterly loss in a year. Auto insurers have struggled to keep pace with higher used car prices and the rising costs of accidents. And in Houston, furniture store mogul Jim McIngvale won $75 million on his bets that his hometown Astros would win baseball's World Series. That includes a $30 million payout from Caesars Sportsbook that the company calls the largest ever at a legal sports betting site. Some of McIngvale's winnings will go to his customers. Those who bought a mattress for $3,000 or more will get their money back. So this is just an incredible story, Madison. Obviously a huge payout for a bet that paid off. And of course, I just think of gambling. You can gamble on sports. You could also gamble by buying lottery tickets. And just PSA, you might want to go out and buy a Powerball ticket because that jackpot's about $2 billion now.
Yeah, Kaylee, my most toxic trait is believing that if I bought one lottery ticket, I would absolutely win. So maybe we should just all pool together and buy a ton in hopes of getting that $2 billion payout.
Yeah, fair enough. I know you're heading to Florida to cover the midterms. You can buy tickets down there. I'll buy some in Pennsylvania, and we can split the winnings if that works out for us. But up next, we're going to be heading not to different U.S. states, but over to Egypt, where COP27 is underway. Our Francine Locke will be live there with an interview from the OECD's Secretary General. This is Bloomberg.
most fascinating entrepreneurs because you all started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5,
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's
and
fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, of the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring. I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
From New York City.
In London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this
How
story.
are you thinking about those dynamics?
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close. Welcome to Bloomberg Crypto.
This is Bloomberg Surveillance, the early edition, and here is what you need to know. China sticks with COVID zero and delivers downbeat trade data, but investors in Hong Kong and elsewhere don't seem to care. They keep buying even after big gains on Friday. Tech cuts back. Apple is taking a big bite out of expected iPhone 14 production. Meta gaining on a Wall Street Journal report that thousands of layoffs will start this week. And US politicians delivered their final messages ahead of the midterm elections that look too close to call. Turnout is expected to be high. I'm Guy Johnson in London, Madison Mills, Kayleigh Lines in New York, Anna Edwards, Matt Miller, both off today. Kayleigh, how are we looking pre-market?
Well, it's interesting, Guy. Obviously, there's a bunch of huge potential risk events this week, including tomorrow's midterm elections and the CPI on Thursday, but equities are rallying on this Monday morning. Right now, futures are in positive territory. We're up about 0.4% or so on S&P E-minis, higher on NASDAQ futures as well. And in the bond market, just a slight bid coming in, the 10-year Treasury yield down about 2 basis points to just shy of the 4.14 level. Of course, that's after we've risen for 3 days in a row. Two stories I want to point to in the commodity complex. First is natural gas futures up 8.4% here in the U.S. as we brace for winter weather in the Pacific Northwest and colder weather across most of the country over the next week. So the first big cold snap of the season. And then oil essentially unchanged on the day. WTI right now trading at 92.56. It was lower earlier. A lot of that having to do with concern around China and the COVID zero policy there after officials in China over the weekend essentially said that's not going anywhere. We are going to stay very strict about reining in COVID zero. As for how that's translating into equities, of course, we saw Chinese equities rallying in spite of that in the overnight session. And as a result, a lot of those U.S. listed Chinese companies are rallying in pre-market as well. Alibaba up 1.3%, Baidu by about 2.4%. when it comes to those ADRs. Elsewhere in tech, another name that's rallying, Guy, you mentioned this, Meta, getting ready to cut off potentially thousands of workers from their jobs this week, trying to rein in costs. Investors seem to like that proposition with the stock up nearly 4% before the bell. Apple, though, moving lower, down about 1%. This is after a Bloomberg scoop overnight that they could produce 3 million fewer iPhone 14s than originally anticipated. Part of that is a supply issue with lockdowns in China, but another part is softening demand, Guy.
Absolutely. Here in Europe, stocks are bid, but it does feel a little bit more cautious than it did Friday. Kelly talking about what is happening in China. The story in China, difficult to fathom at the moment, and as a result of which, while we are seeing a bid into equity market, it doesn't feel like Friday. So stock 600 up by around 0.5%. Keep an eye on what's happening in the bond market. We've got a bid in the bond market, which is interesting. given the fact that we've got some very hawkish comments coming through, I think, from the governor of the Banque de France. You've actually seen some okay data out of Germany as well today. Continue to pay attention to that. The ECB sounding significantly more hawkish over the last few days, certainly in comparison to the Bank of England. Brent crude absolutely flat. Big rally in commodities on Friday. A little bit more cautious today. We're trying to figure out what is happening with the global demand picture. Take a look at the Chinese trade data, which is certainly slowing down fairly rapidly, both in and out. And that all contributes to a more cautious tone, certainly coming out of energy, which feels a little bit appropriate considering that we need to talk about what's happening in Egypt right now with COP27, Madison.
Absolutely. Let's get back to COP27, like you said, in Egypt, where Bloomberg's Francine Lacqua is sitting down with the OECD's Secretary General. Francine, great to speak with you. I know you've got a slate of huge interviews this week, but just to kick us off, what would you say is the big news so far heading into COP?
Well, if you want to be optimistic, Maddie, then you say that, look, yesterday we got a breakthrough because at least loss and damage is something that's on the table. Now, we don't have a resolution, but actually we could have some headway on that. So I am delighted to be joined by the OECD Secretary General. He's Matthias Cormann, and he joins me now. Secretary General, thank you for joining us. We're at COP, and first, it's difficult to get a real reading on what the war in Ukraine is doing to emissions. So have we left the emissions, targets because we just want to focus on energy security, or will that come back to the forefront?
Well, I mean, the context for climate action has certainly become more challenging compared to COP26, but the need for globally ambitious and effective action on climate change is as urgent and as important as what it was. And while we will see in the short term, or while we have seen in the short term, a lift in the reliance on fossil fuels, I mean, what we will also see is an acceleration in the structural transformation as a result of the higher energy prices and some of the challenges that we're witnessing at the moment. I think you'll see that this will be the platform from which the structural transformation we need, the clean energy transition we need, will further accelerate.
We also need money transfer, and this is what loss and damage is about. Do you think we'll actually achieve action at COP27?
Well, I mean, that is something that we want to achieve here. That's something that we want to see. We want to see real progress. I mean, the world will need $4 trillion US per year in climate finance investment by 2030 if we want to achieve the objectives of the Paris Agreement. I mean, that is 4 times as much as what is being invested as we speak right now. So there's a significant gap. We will need to be intelligent in terms of deploying public investment, but also leveraging significant amounts of private sector investment.
But on loss and damage, where do you stand on that? So should there be a transfer, a quite significant transfer, to basically pay reparation for some of these climate change phenomenons to countries, poorer countries that have not emitted but are suffering the consequences?
Well, developed economies have a responsibility to support developing economies in meeting both their climate mitigation objectives but also their climate adaptation objectives. I mean, we need to, clearly severe and extreme weather events are accelerating, the economic impacts are worsening, and there is a particular responsibility for advanced and developed economies to support developing and emerging economies around the world.
Are you disappointed that China's not here?
Well, it's always better when all major emitters and all countries around the world participate in person in the global conversation. When climate change is something that can only be addressed effectively, globally, with strong global cooperation, and so of course we would always rather if everybody was able to make it.
And of course I'm talking about the head of state because we do have some climate negotiators from China. Talk to me a little bit about your climate monitoring program. So you're releasing it a little bit later. What will it show?
Well, so what we're seeking to do is really to support countries around the world learning from each other, what works, what doesn't work. Track progress in terms of the commitments that countries have made, track progress through the provision of real data and real comparative information, but also use it as a way to provide advice on best practice, best policies that countries around the world can copy in order to meet the objectives, the climate objectives we all share.
So, is it, again, if you had to bet on a concrete action being taken here, what would it be, and what is your climate report showing that they need to prioritize?
Well, what we are showing is essentially what countries around the world are doing, how they're tracking, and the OECD, one of our key strengths by presenting the data, by putting the spotlight on what has been achieved and what hasn't been achieved, we actually force countries to do more in order to live up to their promises. I mean, in the end, what you don't measure, you can't manage. And our climate monitor really is about putting the mirror up and forcing countries to continue to live up to their promises.
And I know you're also working on a framework to look at carbon pricing, but why do we just not have a carbon price already?
Well, you know, if it was that easy, it would long have been done. I mean, the good news is that about 63 countries around the world, representing about 83% of world GDP, have committed to the carbon neutrality objective. But countries around the world are all using a plethora of different measures and approaches. And what we think is desperately needed is a globally more coherent, better coordinated approach. And in order to help facilitate that, we are providing a platform, again, to share information, to share data, to map out all of the different approaches that are being pursued, but also to compare their effectiveness and help inform better decisions.
Have we reached peak inflation?
Inflation obviously is a significant challenge right now, and central banks around the world are taking the necessary steps to get inflation under control, and fiscal policy very much needs to operate in alignment with monetary policy. We do expect inflation to start coming down throughout 2023, but I mean, there are a lot of uncertainties in the world right now. There's still a lot of issues that we can't predict from where we sit right now. We don't know how much longer the war in Ukraine will go, how much worse it might get. We don't know what some of the challenges might be as Europe goes through the winter, for example, in terms of energy security.
Too soon to call peak inflation? Would you say, like, we just need to wait and see?
From where we sit right now, we are expecting inflation to start coming down throughout 2023 on the back of monetary policy tightening, on the back of supply chain bottlenecks easing, and also with, of course, global growth slowing and demand slowing.
Matthias Kortmann, thanks so much for joining us. So that was, of course, Secretary General of the OECD. With that, Kaylee, I'm going to send it back to you in New York.
All right, Bloomberg's Francine Lacqua live at COP27 in Egypt with the OECD Secretary General. Thank you so much. Now, coming up, we will turn our focus from what's happening globally to what is happening domestically here in the U.S. with the midterm elections coming up tomorrow. Mohammed Yunus, editor-in-chief at Gallup, will join us with the latest on what polling indicates about what's important to voters as they head to the polls. This is Bloomberg.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Caitlin Lyons with Madison Mills in New York and Guy Johnson in London. Anna Edwards and Matt Miller are off today. Well, the state of the U.S. economy holds the key to who will win control of Congress in tomorrow's midterm elections here in the U.S., with polls suggesting that hopes and fears for the economy outweigh the many other concerns for voters. Mohammed Yunus, editor-in-chief at Gallup, joins us now for more. Mohammed, the closer we have gotten to the vote tomorrow, the more momentum seems to be building for the Republicans. What is the driving force behind that?
It's hard to name one thing. I think the most important issue in this election, as in most elections in the United States, is going to be the economy. Now more than ever, with inflation really front and center in terms of people's focus. Historically, the economy has been the most important factor. So it's going to be even more so this time. There's some runner-ups like abortion and concerns over crime. But overall, really, economy is first with a very, very far second place to those two other issues.
And if it all is about the economy, is it then just trying to replace whoever is in control to hopes that they will change the economic trajectory of the country? Or is this really about Republicans being seen as better stewards of the U.S. economy?
We know that historically, Republicans have been seen as better stewards of the economy. We've asked that question for generations. Which party do you think does a better job of managing the economy? Republicans have that advantage. It's important, Kaylee, as we've talked about before, to shy away from past equals the future on a lot of these things. Certainly, any incumbent president is facing an uphill battle with votes. The Democrats don't have as much exposure as they did in previous midterm elections. However, the economy really is a foundational issue, and it will continue to be an issue for voters, depending on where they vote and what options they feel will better impact their economic outlook. There are also a lot of local issues that people will be voting on. So it's not just the economy, but that'll be the most common across all districts.
It's certainly the most common, Mohammed, but as Mick Mulvaney told Kaylee last week, President Biden ending his big speech last week talking about the insurrection. I wonder to what extent the Democrats focusing on election chaos, January 6th, is resonating with voters, specifically Republicans. Is that kind of commentary going to move the needle heading into tomorrow?
I think that kind of commentary really speaks to their base, to the Democrats' base. One of the questions we ask is about trust in the electoral process. And right now, 85% of Democrats say they trust that the votes counted across the country will be done so fairly. 40% of Republicans share that view. So that's a huge gap between Republicans and Democrats in terms of their trust in the process. That being said, where people live, again, I can't stress that more, it really determines what they're voting on more than the national focus and national elections. Americans are very knowledgeable of their local government. They have a much more positive perception of local government than national government. So in many of these contexts, I think what's happening locally and voices locally will probably be much more relevant to how people choose to cast their vote than anything coming out of Washington.
Yeah, I mean, your polling on the divide between Republicans and Democrats on the accuracy of election results is shocking, those numbers. I wonder to what extent you think that divide is going to lead to a lot of contested elections as we continue to get results in Tuesday heading into Wednesday.
I think it depends on how close those results will be. Certainly, contesting elections has now become a common part of the American political lexicon. I don't think it's going to be something that we don't see at all, but really depending on how close the vote is in some places, I think will be the greatest factor in determining whether elections are contested. I think we also need to remember contesting the outcome of an election is not necessarily a bad thing. It's afforded within the process of the electoral system here in the United States. The greater concern really is people losing faith in the process that really only represent one side of a two-party system. I think that's what's most concerning. Still, 40% of Republicans do have trust in the process itself, and it will be really critical to see whether future cycles build up that Republican trust in the process again, or whether we see it continue to decline. Just a few short years ago, 60% of Republicans had trust in the electoral process. So it's not something that's unachievable.
Mohammed? just very briefly, how does what happens this week change the tack we're on towards 2024?
It means everything for 2024. The presidential election begins the day after the midterm election here in the United States. We know that President Trump has already hinted to, so has Governor DeSantis, about their plans for running in the future. So as soon as we see a result from this election, expect to see the presidential election swing into full force.
Yeah, and of course, we are expecting President Trump to announce another run at the presidency sometime in the week following Tuesday's vote. Mohammed Yunus, editor-in-chief at Gallup, thank you for waking up early for us and providing some insight ahead of the midterms. Now, when it comes to the midterms, the crypto industry also is going to have its eyes on the composition of Congress. The question is, after the vote, will we finally get progress on regulation?
Our regulators and, frankly, our Congress is an hour late and a dollar short. And we need to catch up with where these cryptocurrencies are going.
Congress has been calling for greater regulation of crypto for years, but it's been a lot of talk, and to this point, not a lot of walk.
We have the intention, we're just not quite getting it over the line.
The crypto industry has been asking Congress to help create the rules of the road, but optimism on progress has faded as the midterms draw closer.
There was some hope from many in industry that this was actually going to happen this year, that a bunch of bills that had been proposed were promising, that we could actually see some movement here on Capitol Hill. But just like pretty much everything in Washington, heading towards the end of 2022, it all seems kind of stuck right now.
The bills that have gained the most traction include legislation to regulate stablecoins and to give the CFTC more power to oversee digital assets. But success on those initiatives will have to wait until after the midterms.
I think both Kirsten and I believe that the bill in one piece as a total bill is more likely to be deferred until next year. It's a big topic, it's comprehensive, and it's still new to many U.S. senators. It's a lot for them to digest with the few remaining weeks we have in this calendar year.
Big names in crypto like Sam Bankman-Fried, the billionaire founder of FTX, are also trying to make change with their dollars, emerging as influential political donors. While he says he's motivated primarily by pandemic prevention and wants to support candidates who will prioritize that, he also has been pushing the regulatory agenda.
I have a duty as a member of the industry to try and get us regulated, to try and move the industry in a more responsible direction. And I think that requires engagement. I think it would be irresponsible of me not to engage, with Capitol Hill, with regulators. And the things that I've been arguing for are more regulation for the industry. I think that's what's right for the country.
Bankman-Fried is the fourth largest individual donor this midterm cycle and has made about $40 million in political contributions this year. He has said he could give even more in the 2024 race.
I think that you're going to see more people pushing into politics because now the interaction with DC is going to be one of the main drivers of whether enterprises are able to grow and operate successfully.
And we'll have much more on this topic later this week on Bloomberg Crypto. You can catch us at a special date and time post-midterms. We'll be live on Thursday at 1 p.m. in New York, 6 p.m. in London. This is Bloomberg.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Bloomberg Surveillance Early Edition. I'm Madison Mills with Kaylee Lyons in New York and Guy Johnson over in London. Anna Edwards and Matt Miller are off today. So a look at what's ahead this week. Tech earnings continue with Lyft reporting today. Of course, that follows Lyft announcing it will lay off 13% of its staff last week. Now, here in the U.S., Americans heading to the polls Tuesday for the midterm elections. Results are going to take time, trickling in late Tuesday, early Wednesday. We could also get contested results as well, so a lot to watch there as it unfolds. Then heading into Thursday, the latest U.S. CPI print is due, so all eyes are going to be on that to see how we're doing with inflation. Also on Thursday, we have some earnings from Chinese chip makers. And then on Friday, Singles Day, the world's biggest shopping event of the year, takes place in China. Alibaba up this morning, perhaps potentially a little bit in anticipation of Friday's big day. But for now, Kaylee, I know you and I are very focused on the midterms. I'm heading to Florida in a couple hours here. You're heading to Pennsylvania. So we will be very busy this week monitoring the results as they come in.
Yeah, and for Pennsylvania, at least, it could be a long time before those results do come in, because it's one of the states in which they can't start counting mail-in ballots until 7 a.m. on Election Day, and about 1.4 million people requested ballots. So it's going to take some time to count those. Election officials have already warned us about that. And then for the Senate race, which is crucial, Fetterman, the Democrat, versus the Republican, Dr. Mehmet Oz, their margin right now in polling is virtually nothing. And if the margin is 0.5% or less in Pennsylvania, it will go to an automatic recount. So for one of the races that could decide the balance of the Senate guy, it could be days before we actually have a final result. But of course, there's a number of other races we're watching as well. And the markets have to pay attention to what a divided Congress might mean.
Yeah, generally a fairly good outcome for markets. What I want to know is, what does this mean ultimately for 2024? Does Joe Biden run? Does Donald Trump run? Does DeSantis run? I know Tom Cotton's out, but there's an awful lot riding on this election in terms of what the runners and riders are going to look like into 2024. It's going to be fascinating the next few days how they position themselves.
Yeah, and of course, we already had Trump alluding to his rivalry with DeSantis in remarks made over the weekend. Madison will be on top of that for us. From Florida, we'll have reporters all over the country. Ed Ludlow will be in Arizona as well. Our very own David Weston will be hosting special coverage of the U.S. midterms on Election Day. That will take place tomorrow, 8 p.m. Eastern, live from Washington. Madison and I are going to head to our respective travel at the moment. That wraps it up for Early Edition. More surveillance is ahead with Tom, John, and Lisa, so stay tuned. This is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto. The people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
The economy is not responding to the Fed's tightening. And so they've got a lot more work to do.
The signals that we would expect to see after this much of tightening from the Fed, they're just not there right now.
You could get to a terminal rate that's even closer to 6% if inflation does not abate.
The Fed is setting itself up to reverse some of this policy tightening.
We haven't seen the Fed raise rates so rapidly before. We haven't had coronavirus economy, and we haven't had inflation like this for 40 years.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Central.
Alongside Tom Keene
What's going
and Lisa
on
Abramowitz, I'm
already?
Jonathan Farrow. Amazing that Election Central is actually here in New York over the weekend. Tom, I actually think that speaks volumes. The fact that we've got the president campaigning in New York say that he won by more than 20 points in 2020.
It's just absolutely fascinating to see not only President Biden, but President Trump out there with President Obama as well. And all of the tensions of this election are what we cover every day. And I'm going to go right to Joe Biden's worst nightmare. Do you see $100 Brent crude in the vicinity of tomorrow or Wednesday? We're not there yet.
Did he say no more drilling yesterday evening?
I missed that.
Is that what he said? No more drilling, no more drilling. So on the one hand, he wants to tell progressives no more drilling. And on the other hand, he also wants to tell them the oil and gas prices are where they are because the oil companies won't drill. Can you make that happen for me? Just help me understand.
There have been story after story about how Joe Biden's gaffes have really directed where he is and the spats that he inadvertently created with, for example, Joe Manchin about coal production. I mean, there's so many different aspects of this because it is a conflicted moment at a time when natural gas and crude products are also very much the focus despite the goal for longer-term neutrality.
You know what they're barely talking about this week?
What?
COP in Egypt. Isn't that a change from 12 months ago? They don't want to talk about that on the campaign trail this week, do they?
It's messy. Right now, how do you connect the idea of needing fossil fuels now with the idea of removing some of the fossil fuel emissions later on? It is impossible to square that with any kind of blunt message. And right now, again, we know nuance doesn't sell.
Futures right now, TK, up about a half of 1%. Big rally to close out the week last week off the back of payrolls, but still a weekly loss. Can the bear market rally continue? Mike Wilson of Morgan Stanley's got a ton to say about that, Tom, and I'll catch up with him a little bit later.
We got to go right to CPI here. And the question I have off of Michael Ferroli at JP Morgan, are we looking at rents sticky? Are we looking at a reaffirmation of oil up? Again, I'm on the Brent $100 watch. I mean, that's not rent, but that's a gallon of gas.
If I had to put you on the spot, Do you want the results from the election or CPI up front? If I could give it you right now, what would you take?
I would take the CPI statistic up front, but it's going to be an eventful election. And based on the punditry I see, and many of these good guests will join us in Washington tomorrow and Wednesday morning as well. And John, to me, the basic idea is the how muchedness of this.
How muchedness.
How muchedness.
How muchedness.
That's 4 years international relations at University of Mosawa. Okay, the how muchedness of
are you still upset by the game over the weekend?
Upset. I'm not upset. In hockey, folks, there's people that go directly to the net. I was not one of those. They have a gift to go. His first goal was textbook.
He's a dream,
what a beast he is.
He's just an awesome football player. Bramo, save Keane. Very upset about the sports results.
Give us the how muchedness of your brief.
Before we get into the how muchedness, I want to make a comment about Mike Wilson and tie it to the election. That we're actually seeing, because of the CPI, because of inflation, because of where yields are, the idea of less fiscal spending being positive for stocks. Just let that set in, right? People are expecting a rally because of the prospect of less fiscal spending and perhaps more gridlock. At 9 a.m., we'll get the European view of this exact issue. How do you spend into an inflationary outlook? EU finance ministers are meeting in Brussels to talk about the energy crisis and to talk about a deteriorating economy and what they can do or not to support that. This, as CPI over in the Eurozone climbs 10.7%, we're going to get further reads around the country, around the world later this week in terms of CPI, and perhaps that will shape this entire debate in terms of how far the central banks have to go and how little fiscal spending can really be put into place. Today we have a slew of Fed Speak. Boston Fed President Susan Collins and Cleveland Fed President Loretta Mester are going to join each other at 3:40 p.m. at a panel discussion, a moderated discussion. And Richmond Fed President is playing the 6 at 6 p.m. Tom Barkin. What can they say at a time where they're not making any progress? Bill Dudley was speaking at a panel overnight in Singapore, and he was talking about how they really haven't made any progress whatsoever on the employment front. How do they talk about that when it's a really uneven transmission mechanism? And aftermarket, when we're talking about earnings, we get Lyft earnings, the latest of a slew of tech companies that have announced layoffs. And I really am curious about how this plays out, whether this is just a tech story, as we were talking about last week, or whether this is a broader kind of cutback. We've got Lyft cutting jobs, Meta overnight saying that they're going to cut thousands of jobs. John, is this just a specific area that really built up over the pandemic, having to now reset expectations?
Lisa, thank you. That's where the excess was, and that's where we need to unwind some of the excess, apparently. Apple down about 0.8% in the pre-market, Tom. So Apple came out yesterday. The lockdowns in China continue. Ultimately, that's going to affect supply. We came out with an additional story here at Bloomberg as well, saying that these cuts aren't just about available production. This is about demand too. That's the interesting element that we've put out there in the last 12 hours.
What do I notice, in full disclosure, folks, I bought 2 of these beasts here in the last 5-10 days, and one of them on a huge wait list, I might point out. What I would point out, John, is a polarity between their fancy, expensive phones, the one Mark Gurman has, and the other ones, the cheaper phones, aren't moving.
What did you buy? The more expensive one?
I bought a purple, fancy, more expensive one, and I got the one just, Vet Bill got the Pro Max. Kennelfie got the Pro. This is ridiculous. And full disclosure, I was thunderstruck at the quality of the photos. I had no idea.
Is the camera almost as good as the Samsung camera now?
I don't know. I have no idea.
I'm told by Android users that the Samsung camera is really, really good.
Are you just trying to trigger people this morning?
Trigger them? What? I've got an Apple.
No, I think John's point is germane. This ecosystem they have is built up. As Dan Ives, I believe we're referencing Dan Ives here this morning to get his opinion on this, but the bottom line is you got to wait weeks, months to get the fancy iPhone.
Dan Ives, 8:15 Eastern Time. Looking forward to that. Ben Laidler joins us now, global market strategist at eToro. Ben, we're trying to work out what the next catalyst is for this equity market. Let's call it a bear market rally, Ben. I don't know if you agree with that terminology, but where's the next catalyst come from?
Yeah, by my count, this is our sort of 5th bear market rally. You can see up to sort of 10 before we have that finally have that breakout to the sort of next bull market. What kicks off the next bull market? I think fundamentally it's the Fed starting to cut interest rates. We're obviously, quite a long way from that right now, but I think this process has sort of begun, right? Earnings have been less bad. They continue to hang on in there. The necessary first step to the Fed cutting earnings is stopping the hike earnings, and we're getting closer to that right now. Valuations below average, sentiment's very depressed. We're moving into the best seasonality of the year. And, there's a bunch of big wild cards out there where I think the risk is on the upside, and, China's the obvious one. You put all that together, and I think there's absolutely enough to say that we're sort of building a bottom here, and this is a very investable market, and the next big move is up. I just think we're probably going to bounce around for a little bit before we have that sort of definitive, sustainable, beginning of the next bull market.
Well, Ben, there's certain gamma out there, there's certain volatility, there's certain acceleration, but looking into 2023, using the Greek letters alpha and beta, is this going to be an alpha ad market? Is this going to be an individual stock picking market, or is it an index fund market?
I think it's alpha for the first half and beta for the second half. I think, growth is absolutely going to slow. We're going to be talking more about recession. Earnings are going to come down. But the closer we get to the top of the Fed cycle, the more we start looking forward to rates being cut. I think that takes pressure off valuations. So I think it's very much going to be the opposite of this year, right, where earnings held up and valuations were absolutely crushed. I think you're going to see some valuation relief. I think earnings are going to sort of stay under some pressure. I think we're going to see the benefits of diversification a lot more. We're not going to see bonds and equities, I think, both get crushed together, which is the sort of historical anomaly we've seen this year. So I think it's all change again, right? This year was very different to last year, and next year I think is going to be very different again. So I think investors are going to have to stay on their feet. I think it's all about stock picking in the first half and maybe more about beta in the second half.
But just to wrap it up, are you basically saying that in the next year or so we go back to what we knew over the past decade or so, a low inflation, rate-cutting environment that's a tailwind for all assets?
Yes, with a sort of ish. I mean, I think the last decade is extreme, both in terms of the level of growth, also in the level of inflation, the level of interest rate. I think they're all going to ease in that direction, but I don't think we're potentially ever going back to the degrees we saw for all those things over the last sort of decade or so. So I think that's going to be I think growth is going to get a bid, tech's going to get a bid, but I think certainly for the first half, it remains very much about sort of value and defensive assets, certainly for the first half, a bit more risk in the second half.
Hey, Ben, wonderful to hear from you, sir. Ben Lader there of eToro. TK margins under pressure. You see that commentary from BlackRock. You see it from Goldman. You've said it a million times. It's your phrase. Companies adapt. Let's talk about how they're adapting. They're cutting.
Cutting. That's the first path always, and I think we're going to see much more here. We're advantaged by Bloomberg Intelligence. Gina Martin Adams is heated. You're going to see it at the operating income line. Every CFO is going to lean over to the CEO and say, here's the shortest path to stability.
You know what's amazing as you look across the tech sector? I actually think it's the chip industry. Think about how quickly that story's moved in 12, 18 months, Breno.
Yes.
It's flipped from we can't get enough of the stuff to we need to start cutting. That's quite a change. And I think for a lot of people looking at this market and they look at the economy, they think about how much more quickly, perhaps, can inflation come down? I'd look at that industry and say things can flip pretty quickly.
And it's not just chips, right? I mean, it's also the retail sector more broadly when they produced a lot of clothes that they didn't perhaps need now, but they needed about a year ago. It's the same kind of story with cutting some of the costs. At what point, though, do you still see services continue to accelerate, people still paying more for that in this sort of bifurcated market where you see pockets of inflation still accelerating is really what's got people concerned?
7 handle is what we're looking for from CPI on November 10th. You seen the numbers?
Yeah, but honestly, is that a good thing? I mean, if we end the year at 7.8%, is that really going to be such a victory considering where we thought we would be by a year?
I wrote a banner and I didn't use it where 7.9% is way different than 8.1%. That's about all I can give you on that. Sure. I thought Ferroli was brilliant this weekend at JP Morgan.
Always is.
They're looking at like, you know what, inflation's coming down. You know what, don't tell rents.
Michael Schell.
That's their sum.
We're going to catch up with the man from Market Field Asset Management in the 7 o'clock hour, about 50 minutes from now. Looking forward to that. Equity futures this morning, big week ahead. CPI and midterms in America. Futures higher by 0.6%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The U.S. and Russia reportedly have held private talks on ways to avoid escalating the war in Ukraine. According to the Wall Street Journal, a peace settlement wasn't a goal of the discussions. The Biden administration was said to have warned the Kremlin against using nuclear weapons. In Egypt, United Nations climate change talks got underway with a deal on discussing reparations. The idea is that rich nations can help pay for damages caused by global warming elsewhere. Industrialized nations have repeatedly blocked attempts to add that to the agenda. In China, exports and imports unexpectedly fell for the first time in more than 2 years. Overseas, consumers bought less, while demand in China was hurt by COVID-0 controls and a housing slump. Resilient exports had been a major support to China's recovery in the past 2 years. Twitter is asking dozens of employees it laid off last week to please come back. Elon Musk cut close to 3,700 employees last week to slash costs. Bloomberg's learned that some were laid off by mistake, and others were let go before management realized they may be needed to build new features that Musk wants. And Bloomberg has learned that Apple expects to make at least 3 million fewer iPhone 14 handsets than originally planned for this year. Now, the cutback is due primarily to softer demand for the iPhone 14 and 14 Plus. Apple and its suppliers now aim to make 87 million of the devices or fewer. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
These floating flowers are made of 92,000 solar panels. Laid on the surface of a reservoir, they can generate 41 megawatts, which is enough to power 20,000 homes. It's one of the biggest floating solar plants in the world. Floating solar arrays have been gaining traction in Asia, including countries like Singapore and Thailand. Floating projects typically benefit from an easier connection to the power grid. They can also restrict algae blooms while keeping the solar panels cool. This one in particular has helped the local economy. When the power plant was first proposed, residents were given the chance to invest. Some locals were also offered jobs during construction. In fact, it was the community that requested the panels to be shaped as flowers to look more appealing. South Korea still relies heavily on imported fossil fuels, but will need to change that to reach its goal of becoming carbon neutral by 2050. Solar plants like this one may help the country reach its net zero goals.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding. And the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
From New York City, in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics?
8th, as Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections.
We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tune into Surveillance live from D.C. at 6 a.m. on Wednesday for the latest overnight. This is Bloomberg.
Democracy is literally on the ballot. I've been making this case since I ran. You know, there are more than 300 Republican candidates for state, local, and federal office who are election deniers. These deniers not only trying to deny your right to vote, they're trying to deny your right to have your vote counted.
The President of the United States, a busy weekend campaigning for him, live from New York City this morning. Good morning to you all. Here's the price action to kick off a busy trading week. Equity futures look like this, up 0.5%, adding to the gains of Friday. Yields lower, just a basis point on a 10-year, 414.40. In the FX market, Euro sterling, a bit of strength, just south of parity, 99.81, with positive 0.2%. And crude going nowhere, but Tom, back in the 90s,
well,
92.64.
Yeah,
on
Brent
WTI.
crude $6 up, $98.67. It's not through the highs of Friday, but it's there. One event, I think, gets you to $100 a barrel, which for President Biden is $4 a gallon and up gas. And out in California, of course, a lot more than that. We will go to the person we will lean on here tomorrow in Washington and Wednesday morning as we pick up the debris, and that is Anne-Marie Horton, our Bloomberg Washington correspondent, steeled to join the surveillance entourage tomorrow morning. I look, Anne-Marie, at my reading over the weekend, and the thundering silence I noted was not distrust in the polls, but just what is the value of the polls? You talked to all the experts, both sides of the aisle. Do the polls speak the truth?
Well, they're a bit confusing, right? Because when you look at the polls in terms of issues, top of the issue is inflation and the economy, and that's what people are going out to vote on. And at the same time, when you ask them, who do you trust, the economy and things like crime more in the hands of, it's Republicans. But then over the weekend, there's an ABC Washington Post poll that says from people's districts, it's pretty much neck and neck for Republicans and Democrats who they're going to vote for. And then also an NBC poll says that Democrats are now catching up to Republicans in terms of enthusiasm of voters wanting to go out. But if voters are focusing on the economy and inflation, other polls show they should be leaning Republican. So they are quite confusing at the moment. I think by and large, everyone is expecting, obviously, a red either ripple, wave, or tsunami for the House. And it's really just going to come down to the Senate to see how this shakes up for next year.
How do we determine turnout election day, or do we just have to wait till Wednesday morning?
Well, we already know what some of the turnout is. So more than 40 million people have already voted. In Georgia, you're seeing record early voter turnout. I was looking at data this morning from a Democratic data analytic company looking at Pennsylvania already beat the last midterms 2018 for ages 18 to 29. This is a key group the Democrats are clearly trying to harness to make sure these individuals, which a lot of them are young, lightly lean, progressive. Look at the president last night in Sarah Lawrence College in Bronxville, New York. But in Pennsylvania, these individuals are already going out and voting.
When you talk about New York, and we were talking about that earlier, John brought up what does it say when Joe Biden is campaigning in New York, when you do have such an overwhelming Democratic feel in this state? How much is this a single issue election? In New York, perhaps crime. In other areas, perhaps economy. And in other areas, I'm thinking Georgia and Missouri, perhaps abortion. How much is it sort of select numbers of individual issues that are driving people to the polls?
Really, you have to look at locally what is driving people out. You know, all politics is local, as they say. In New York, it has been crime, and it's not just President Biden. You had the former President Bill Clinton. You had Kamala Harris, the vice president, which really hasn't done a lot of campaigning with individuals, also out on the stage with Governor Hochul. I think this speaks volumes that the Sunday evening before the midterm elections, the President of the United States is in Bronxville. He's in Bronxville, New York, trying to make sure they can hold on to the governorship in New York. And this obviously is not going to change the calculus of this administration in Washington, D.C. and Congress, But what kind of tone does this set for the Democratic Party going into 2024? I'm looking also at the mayor race in Los Angeles and the fact that the Republican, this real estate developer, Mr. Caruso, actually is gaining a little bit of advantage. What kind of tone is that setting? And I think that's what people are most interested in at the moment.
It is kind of amazing, Anne-Marie, that we're actually not talking about the midterms at all. We're talking about the warm-up to whatever happens in 2024. Former President Trump saying that he's going to probably announce in the next week or so after the election. People wondering, what will Joe Biden do? What is your sense on that?
Yeah, and the former president, Donald Trump, actually said at a rally this weekend, stay tuned for his rally this evening in Ohio. So maybe he'll even hint more at his 2024 bid. You know, right now with the Biden camp, they say they are running. Obviously, this is something that is a 2-year-long race. The president, there's lots of questions about whether or not he will actually end up doing the next 4 years, but many maintain that if President Biden will run if the former President Trump ends up being the nominee, but a lot can happen in the next 2 years. I mean, look at the Political Report this morning. Look at some of the big Wall Street money is going, and that's going to Ron DeSantis. You had Ken Griffin pouring money into that campaign, and he said he would if he runs for 2024.
AMH, thank you. Anne-Marie down in D.C. Looking forward to the coverage over the next couple of days. Lisa, for a lot of people, it comes down to whether we have an outcome that loosens or tightens the purse strings down in Washington. And what's interesting about that is that in the near term, if you get one that tightens the purse strings, I think people see that as somewhat bullish. Is that going to be bearish in 12 months from now? If inflation is lower and the economy's rolling over and the fiscal support can't be provided? I do wonder, that's a question I'm asking myself this morning.
I mean, it also gives you a sense of just how much full circle we've come, right? That less fiscal support is bullish for markets, even though in the past, more fiscal support was bullish for markets. This question of, is this just purely an inflation game to get inflation under control, bond yields under control, and that's going to really dictate gains, and to your point, for how long? And when does the game plan change?
Did you want the breaking news of about 2 minutes ago?
I can't.
You on top of
I'm
this?
talking to travel right now.
Are you booking flights?
You guys
Champions
are too
League
much.
draw is out.
Oh, this is fun,
So
John.
this is the knockout stages in the middle of February because the World Cup is disrupting the whole thing. AC Milan, my club, against Tom's Tots in the middle of February. Are we going to go to this? The draw's just
San Siro,
out.
is it? In the first
San
time
Siro.
in 12 years. First time they've played in 12 years.
It's been a while.
Explain to our American audience, this is not Premier League. This is the all-European
The best of the
league.
best in Europe, yeah.
And the answer is AC Milan's really on their game this year.
They're better than they were maybe 5 years ago.
Okay.
This will be interesting.
This is going to be in Milan.
Are we going to go? Yeah, the first leg's in Milan, and then the
So-
second leg is in London.
So can you walk, we got an intern over here I've got to talk to. Can you go be sure we can get the American Airlines to Milan?
Honestly.
If we can't, that we'll
You're
go
gonna come
through
to this?
London if we have to.
He's going to be eating the pie with a fork and knife.
I
You'll
don't
be
think
seeing-
they're not doing pies in Milan.
Not in Milan.
Okay.
Okay. No, I know. Maybe not in Milan. When you get to London, what do they do in Milan?
Campari?
Can have a Campari.
Have a Campari.
We'll make this happen. Live from New York. This is Bloomberg.
satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Let's get the trading week started. Equity futures up by 0.6% on the S&P. On the Nasdaq, up by 0.6% also. The small caps, the Russell, positive by 0.7%. The bond market shaping up as follows. The range on a 2-year last week, the high was close to 480. The low was close to 440. That's a 40 basis point range last week on a 2-year. Right now, somewhere in between 468.18 on a 2-year. Yields higher on the session by a couple of basis points. In the FX market, take a quick look at the euro in foreign exchange. Even with that move higher in the week in a 2-year, the DXY, the dollar index, didn't give me much last week at all, Tom. Euro dollar back to 99.84.
I think it's an important insight, and what's amazing there is how yen has strengthened 146.64, and I do agree with the U.S. yield shift up. We didn't see it in further dollar strength.
A lot of weakness out on Friday, Tom, post-payrolls. I think we're all still trying to work out what that post-payrolls move, Tom, was all about.
It is a time of change and all as we readjust to the end of the year and maybe readjust after the election. Joining us now, someone with terrific perspective on this, Alan Ruskin, Chief International Strategist at Deutsche Bank, is well. Alan, I want to go to the path from ultra-accommodative Stanley Fischer to accommodative to an unmeasurable neutrality into what Dominic Constam over at Mizuho calls super restrictive, which is basically disinflation, even with oil, even with rents. How close are we to restrictive? How close are we to super restrictive?
Great question, Tom, because I think you can't just look at this in terms of monetary policy. You have to look at it in terms of fiscal policy as well. And I think the most underrated element in terms of the policy stance is that fiscal policy from 2021 was really the most stimulus we've ever had by quantums. Yeah, I think had a 10% of GDP stimulus at that point for over those 2 years, about 5 times what a large stimulus is. That's still reverberating. That's still showing up in excess savings. That's still buffering the consumer. And to me, that is creating the underlying resilience. That means that interest rates can be much higher than they would otherwise be. Right. And that interest rates look like they're much tighter than they are.
An arch theme of your colleague David Folkert's Landau has been there will be fiscal stimulus clearly in Europe to rebuild Europe after an horrific war as well. Do you see fiscal leveling, fiscal stimulus, or maybe even some form of drop down in fiscal spending in America?
Look, I think a lot is going to hinge on Tuesday and the events thereof. I think the anticipation is that fiscal policy is going to be a lot tighter going forward. I think the question there again is what are we going to see in terms of front loading from the lame duck session in terms of the debt ceiling, how much constraint is that going to impose? But I think the anticipation will be that we will see tightening. But I again want to emphasize the fact that the lagged fiscal stimulus from 2020 and 2021 is still going to act as a buffer for 2023 and 2024. So it's still going to be substantive. And I'm not that worried about the tightening on the fiscal side.
Okay, but there's a very strange confluence of bad news is good news for markets right now. And we could put fiscal spending in there. It's good when we get bad data because that means yields will go down. It's good when we get less fiscal spending because it means bond yields will go down and perhaps they'll cap inflation. At what point does that run out and people start to think, okay, wait a second, this isn't going to support the economy, and that is negative broadly for the dollar and for risk assets?
Yeah, Lisa, I think if you look at past patterns whereby we've had a Democrat president with a divided Congress, you've seen, as you might expect, that fiscal deficits tend to come down. You see bond yields well supported, but you also see equities tend to underperform, and you see the underlying economy, the GDP numbers tend to be weaker. So I think you asked the right question there, that it does tend to add to underlying weakness, and that good news for the bond market is only going to filter through to some extent as far as the economy is concerned. I don't think it's going to be sufficient, for example, to stop a recession, say, by the time end of 2023 into 2024.
We had Ben Laidler on earlier in the show, earlier in this hour, and he was saying that he thinks that there's going to be a very big move up in risk assets because